Good morning, everybody. Welcome back to another episode of the Market Open. It is Tuesday, April 28th. Thank you, everybody, for being here. We have finally got, after about 2 weeks, a red pre-market. And it's a little bit of an ugly red pre-market for a variety of reasons that we're going to get into and we're going to talk about. But we are indeed red. It's been 18 straight days of green on the semis. I think a lot of people expected that this was going to happen. And now it's happening. It's not like we haven't had red over the past couple of weeks, but they've been in different sectors like fintech and SaaS. Today, the sector that has been ruling throughout the past 18 days, basically the past 3.5 weeks, which are the semis, are getting hit pretty bad. SOXX down 4% in the pre-markets. SMH down 3.4%. AMD is down 5% in the pre-markets. Oracle's down 7%. NVIDIA's down 3%. Amcor's down 11%. IREN's down 5%. Nebius below 140. Ugly, ugly morning for the semis. We will talk about what's happening. We'll also talk about why I don't think this reaction is as reasonable as the market is suggesting, outside of the fact that we've rallied so hard that there was this inevitable pullback coming. That's more reasonable. But the tailwind, or the catalyst that provided the tailwind for this red, was a Wall Street Journal article that came out last night. We'll talk about that. And quite frankly, today, when the market opens, we'll see if people step in to buy the dip and if they're calling BS on that article or if people buy into it and they're kind of believing the narrative that the journal is painting here. So a lot to talk about. We will get into it. We had a bunch of earnings from yesterday on the close that we'll talk about. Celestica, Amcor, Cadence, a bunch of other companies. This morning, we had a ton of companies. We had Spotify, Coke, UPS, Corning, GM, General Motors, Galaxy, S&P Global, BP, TLDR. They all beat on the top and the bottom. Their stocks might not be all up this morning because markets in general are red, but all these companies beat, and they beat pretty decisively. So good thing is most of these companies are beating, which is the most important thing, and hopefully these companies can continue to be. Crude right now in the pre-market. Unfortunately, this is also part of the reason why we are red. $100 on crude for the first time in a week and a half. Not good to see. There's also not been much progress in the Iranian-U.S. talks. And so, I mean, we're setting ourselves up for an obviously very, very, very ugly day. Obviously, if we are red, in the context of the stock market because of this headline that we had last night, that's going to cause some downside momentum. Oil up at 100 for the first time in a couple of weeks. That's going to cause some downside momentum. And then again, we've been on a massive, massive rally, which is also going to cause some downside momentum. And it's not going to be easy for the market to necessarily just kind of get through this. So I think you're having a problem there as well. Also, you did have a headline right now. Well, this is why oil is up. The UAE announced they will be leaving OPEC effective May 1st. This will officially end the UAE's 59-year membership in the organization, the Iran war, redefining global energy. I actually am just seeing this headline. It came out about 20 minutes ago. I am just seeing that right now. There you go. That is your headline. Kind of was wondering why oil got this much of a spike because there wasn't any headline from Reuters or Bloomberg specifically on the Iran war. I guess this is it. You got the UAE leaving. Okay. There we go. That's a great thing to wake up to. I thought we were mainly going to focus on the OpenAI news, which once again, the culprit of all this red is OpenAI, but now we got some Iran stuff to deal with as well. So, well, the implication of this is that obviously there's going to be less companies pumping oil or less countries pumping oil into OPEC. OPEC, again, the conglomerate that kind of has been in control of oil supply in terms of prices and demand, and at least in the context of the Middle East for, a very long time. I don't think this means the UAE is not going to continue to contribute to the oil economy, but them leaving OPEC, definitely you're going to get a knee-jerk reaction by oil traders and obviously bond market traders as well, given the price of oil. It affects inflation and that affects bonds. Yeah, the 10-year right there up on the day, 4.36. We'll have a lot of digging to do throughout the day on why that is happening. All right, let's get into it. Good morning, good morning, good morning. Thank you, everybody, for being here. Erwin, Ahmed, what's up? I'm Benny. Mind the long term. Nick, Dave, Ron, Charles, thank you all for being here. Tomorrow we've got JPOW and earnings. Tomorrow I'll be up early because we've got SoFi in the morning, so we'll have a lot to talk about in the morning, and we will get through it as well. Zocold, Kane, what's up? Krishna, Alex Solomon, what's up, what's up, what's up? Porcoin, George, Amir, Uzi, good morning. Guy in UK. I love it. Guy in UK. Perfect username. Just the guy in the UK. Broccoli Bob, what's up? Scott Cross, Chels, good morning. Umar, Cheeky, JC, Peter Hutchinson, Timothy from Taiwan. For those that don't know, Timothy went to the Boston meetup with his brother. He flew all the way from Taiwan for the Boston meetup last year around May. Absolutely crazy. I was like, dude, you're from Taiwan? He's like, yeah, I flew for the meetup. I was like, this is absolutely crazy. Thank you, everybody, for being here. Let's get into it. All right, so let's start off with the biggest headline of the day, which is why you're seeing CoreWeave come out and try to support OpenAI, because I think there is being an attack on OpenAI right now. And this attack on OpenAI is a bit ridiculous, quite frankly. I am not buying into the FUD that you're seeing right here, but nonetheless, I do think there is some FUD. CoreWeave right here. OpenAI is not our only partner. They're a terrific partner. The business is supported by a diverse set of customers. We continue to see demand exceed supply across AI and continue to see demand exceed supply across the entire ecosystem. By the way, the UAE energy minister says being a country with no obligations under the group will give us flexibility. UAE's OPEC exit will help country meet changing demand. UAE to boost oil production gradually. That means it's actually potentially not that bearish for oil. I know the knee-jerk reaction is to send oil higher, but if the UAE is saying that this will allow them to produce more oil, more supply, technically means that maybe prices can actually come down. So the market has reacted in a bearish way, but we'll see if the market continues to be bearish throughout the day when it comes to the UAE. So what's going on with OpenAI? The Wall Street Journal put out an article last night, and the summary of the article is essentially OpenAI recently missed its own targets for new users and revenue, raising concerns about the company's leaders about supporting its spending on data centers. The chief financial officer has expressed worry that the company might not be able to pay for future computing contracts if revenue doesn't grow fast enough. That is not a quote from her. That is a interpretation of the I guess, internal memos or whatever that the Wall Street Journal has seen, but this is not an exact quote from Sarah Fryer. And the company's spending scrutiny is constraining CEO Sam Altman's ambitions ahead of a potential initial public offering, with Fryer and other executives seeking to control costs and instill more discipline in the business. Okay, there's a lot of reasons why I think this is BS. Like a lot of reasons why I think this is BS, but let's acknowledge the sort of elephant in the room before I get into the bear cases on this article. Obviously, OpenAI is spending a lot more money than they have, right? They're doing $25 billion in revenue, and they're wanting to spend $1.5 trillion. They just raised $122 billion for a reason. They have to meet their spending needs. So to me, the article headline, which literally this article, I mean, this has been widely reported throughout the past 12 hours, AMD, Oracle, NVIDIA, all of these stocks. NVIDIA hit new all-time highs yesterday. Now it's right back down to 209. All of these stocks are lower based on this idea that OpenAI is overspending. It's like, wait a second. We've known this for like a year, that OpenAI is overspending. Like to say that this is something new or unique or challenging the structural paradigm of how we think of AI, compute constraints, etc., it's all nonsense. Like to me, the article has been recycled in such a headline-driven way, and I have my own theory for why that's happening, that it almost makes it seem like, well, someone ended up paying the Wall Street Journal that was heavily, heavily shorted against the sector that's rallied for 18 days in a row to put out something that fundamentally would collapse the narrative, at least in the short term, so they can get the hell out of their shorts. And that's what I really think is happening right here. And we know there is massive, massive collusion between hedge funds, institutional investors, and the media, definitely with the sell side analysts. I quite frankly think that this headline is so recycled and so unoriginal that there was some level of, hey, can you put out something here that can get the market to freak out, get retail to be super scared that everything's going to be over, get them to sell, get stocks to go down so that our shorts can start printing. I really do think to an extent that's the case. And there's two fundamental reasons for why. Number one, part of the reason OpenAI did not meet its revenue backlog is because they did not have the proper compute needs. This is the fundamental internal paradox of the whole article. The article is like, well, OpenAI is not reaching its revenue targets or its user targets, and that's why it's a bubble. And it's like, wait a second, Jassy, Dario, Altman, Nadella, all the AI executives, even Elon has said, if they had more compute, they could grow faster. There's a reason Elon wants to get 100,000 gigawatts of compute a year. They need more compute. So the bottleneck here is energy, power, and land, which seems to be a much bigger story than quote unquote missing revenue targets, because if the compute constraints are the reason for the miss, that's an issue with supply, not demand. There is a reason Nebius just got a $25 billion deal from Meta. CoreWeave got another $21 billion deal. There's a reason all these companies continue to say that if we had, I mean, Jassy said, couple of weeks ago, if we had more compute, we would be 3xing AWS capacity growth, but the capacity constraints don't allow us to meet that growth. All of this comes back down to, is the compute ready to be achieved in a meaningful way that can allow companies to grow? And right now the answer is no, because we don't have enough energy, power, or land, and we have a lot of political uprising against the idea of these data centers. So first of all, the entire idea that they didn't meet their revenue targets, it's like, yeah, they don't have enough compute. I mean, ChatGPT is already getting slower every day when I use it because they just don't have the tokens to be able to generate for everybody. Same thing with Claude. Then you've got the other big headline that I think is also very, very important, which is maybe bearish OpenAI, but it shouldn't be bearish all the other stocks. If OpenAI missed internal forecasts because Google and Anthropic are taking market share, which is something I think a lot of people would agree with, then that's not bearish. The compute's just going to shift from OpenAI to Anthropic or Google. So if OpenAI cancels a data center because apparently they don't have the money or they can't find the funding to be able to allocate capital for that data center, Google takes it up, Microsoft takes it up, Anthropic takes it up. I mean, there's plenty of Meta takes it up, Nebius takes it up, Iren, Corby. There are plenty of other companies that are going to be ready to take up a data center or get capacity for GPUs if OpenAI somehow can't afford them. So the first two reasons for why this article is absolute nonsense and why it's causing a bit of a sell-off is simply because there's a knee-jerk reaction to the idea that OpenAI is not hitting its numbers. So the logical conclusion is OpenAI is a bubble. They're not going to be able to pay all their bills. But in reality, they're not meeting their numbers because they don't have the compute, which is actually bullish. And number two, even if they couldn't hit their numbers, if they had the compute, because they're not growing fast enough, the companies that are growing fast enough, like an Anthropic, are going to take over that compute demand. So to me, those two reasons alone kind of deny the validity of this article, and it's not a reason to freak out. And then finally, I mean, the main reason I think we're down is because the semis just did 18 green days in a row. Yesterday was the first red day, but it wasn't even that ugly of a red day. I mean, AMD was down a couple percent, ARM was down a couple percent, but really NVIDIA, Micron, SanDisk, they all hit new all-time highs yesterday. So yesterday wasn't even that ugly. I think today we'll get an actual red ugly day. Maybe we'll see if the market even flips as we get into the open. But ARM began to trade at 70 times sales. So I think the Wall Street Journal article was the catalyst the market needed to have a reason to finally sell off the semis, because again, it has been an absolutely historic run. And in my opinion, it's actually healthy. It's really nice to see the semis take a breather. I don't think anyone wants to see AMD go from 350 to 317, but if it settles out at 317 today, it was at 200 a couple weeks ago. Not a couple months ago, a couple weeks ago. So the idea that AMD would relax at 320 and then Lisa Su actually puts up earnings to get the continued growth. I think if you're an AMD shareholder, you're probably less nervous going into earnings, because if it's not 370 going into earnings for no reason, but it's more mature at around 300, 320, then there's actually upside to get on good numbers and good news. So realistically, I think this article was necessary to cause the sell-off. And quite frankly, I think there was a lot of institutions that were short and needed a catalyst. And you can't tell me that there wasn't, maybe I'm too conspiratorial here, but it's just, after covering this for so long, it is very convenient that after 18 days in a row, we get an article that is regurgitating the exact same talking points that we have all known for the past couple of years at this point around OpenAI spending commitments. And that is what collapses all the semiconductor names in 12 hours, really, after NVIDIA hits all-time highs. Like, it's just hard for me to believe that. By the way, how did OpenAI raise $122 billion from the most sophisticated investors on the planet if they are in such a horrible position with their spending and their compute and their revenue growth? Like really, the NVIDIA, SoftBank, all these companies gave them $122 billion because they're that scared about OpenAI's revenue growth? Or are they giving them that money because they know if they get more compute, then that compute will equal to more revenue? And as a result, that's the reason they're not growing as fast. And also, I mean, there's a broader reason that, OpenAI focused on consumer, Sora, Anthropic focused on the enterprise, and OpenAI is focused on making a new phone, which is the wrong thing to focus on. Those are real logical, qualitative arguments for why OpenAI is not doing as well. But to say it's because it's a whole bubble and like they're going to collapse, that seems rather illogical given the level of growth that they're putting up, still $2 billion in revenue a year and $2 billion in revenue per month per year. And that the growth that they're seeing is inconclusive until they get the level of compute that they need. They just put out a target for 30 gigawatts of compute by 2030. So if you believe in those metrics and you believe in the ability for them to get that, it's not going to seem like it's that bad at the end of the day. Meta's getting a little bit of a dump right here. The hyperscalers actually like that they're dumping going into earnings. It sets them up for a better win. Amcor down 11%. Why? They crushed earnings, beat EPS by 250%, beat revenue by 30%. The problem is they were up 50% going into the print from the lows. So yeah, Amcor is going to take a dump. Same thing with Celestica. It was up 40% for the year. It's down 13%, even though they beat on the top, the bottom, and guidance across every metric. They're down because they were up a lot going into the print. So I think a lot of these companies are finally taking a little bit of a beating, not because they deserve to take a beating, but because their stocks got ahead of themselves, like an ARM down 7% again today after being down 8% yesterday. I mean, ARM went from 100 to 240. It's not a company with the greatest margins in the world. It's not the most important company in the semiconductor ecosystem. It probably got a bit euphoric, and it's taking a breather. I just think if we're tying these companies taking a breather to the headline as some type of substantive, qualitative reason to feel scared about the AI ecosystem, I think that's nonsense. I think if you're saying, hey, they needed to take a break because everything was up too much, that's a lot more reasonable. And it seems like that's what might be happening here. So that's what we got on this article this morning. Oracle is down 7%. Hedge funds also taking profits by the end of the month. That is also fair. Palantir holding on a little bit in the pre-market, 142.77, trying to go green. ServiceNow as well, getting some green. So you're seeing a little bit of software get some of the love, which means maybe we're going to see a shift potentially from semis to software today, which would be a much needed breather for the semis and a much needed rotation for the software names, which is not the worst thing in the world. Oracle from Wedbush says OpenAI has been seeing very high demand on both consumer and enterprise front. The Oracle sell-off is way much of an overreaction. It strongly disagrees with the notion that its growth is weakening. Oracle's backlog of $553 billion is largely made up of a $300 billion cloud contract with OpenAI over the next 5 years, a project that is set to contribute to $30 billion of revenue, the analyst tells investors in a research note. Obviously, Oracle, which has many ties to OpenAI, is going to get hit, down about 6.5% right here. And if Oracle gets hit, all the other neoclouds are getting hit. Nebius down 5%. And you've got CoreWeave right here that is also down by 7.3%. Where's Iren? Iren down another 4%. Iren was already falling yesterday pretty badly, so it seems like this is a continuation of selling pressure on Iren. But yeah, all the neoclouds are not going to get the type of love that they need on a day like this. AMD announces Advancing AI 2026. Its flagship global AI event will be held both in person and live stream from the San Francisco office on July 23rd, 2026. AMD, again, this stock has been incredible, but at 357, I do think it got a bit ahead of itself, and it is pretty normal for it to take a break. If you bought it in the 350s, you're not happy, but I mean, if you've been a long-term investor in this, it wasn't that hard to not buy it in the 350s, right? It was kind of just like it wasn't that hard to not buy ARM at 250, or it wasn't that hard to not buy Qualcomm, which doesn't even have any growth like an AMD or an ARM or an Intel, and be like, you know what? Let me wait out a little bit and see what happens. Qualcomm right here, down 3.2%. So all of these names that are taking a breather, again, I don't think the OpenAI headline should be the catalyst, but it ended up being the catalyst today. And now we're going to see when the market opens if we are able to actually get some people coming in to buy the dip. But those are the sort of main talking points of the OpenAI article. Let me know if anyone has any thoughts right here, or if people are really scared of this. I am assuming Michael Burry is going to be very happy about this article today. Again, not only is he short, there's a lot of other people that are short, and they probably wanted this to come out. And so the question is going to be, are the bulls strong enough to keep that momentum at least stable on a 5 or 7% dip, or do we need to have a 10 to 20% dip across all the semis for that momentum to really come back and for bulls to step in? Time will tell, but as of now, this is what we've got in the moment right here. Apple is green pre-markets. They're seeing a little bit of a rotation. Google also was green last night, hit 350. Google, 347. NVIDIA down from 217 to 209 in the pre-markets as well. I also really like that this dip is happening right before, again, big tech earnings. Tomorrow is going to be a really important day. I think if you're a Google shareholder, you don't want Google at all-time highs. You don't want Meta at all-time highs. You don't want any of these stocks trading at these massive premiums before they put up results, because then the obvious reaction can always be if they miss on one thing, it's disappointing. Whereas if they sell off 4 to 5% before the print, there's a little bit of wiggle room, and then they can put up some really good numbers, say some good stuff on the call, and there's a chance for these stocks to kind of go up. Also, fear and greed, we have officially hit greed for the past week and a half now. We are still at greed, even in the pre-markets, with this sell-off at 68. So once again, the idea that some of these stocks are taking a breather, not that crazy. Last thing on the OpenAI thing, and then we'll move on to some other headlines. You had one executive who works very closely with the CFO at OpenAI, and he says, I work closely with Sarah, and I can tell you this is pure fan fiction. We're more confident in OpenAI's trajectory than ever. ChatGPT is the noun and verb for AI anywhere in the world, and Codex is winning the coding and agentic era. And you saw this with Jensen the other day, who also sent that big email to all the NVIDIA employees around Codex and GPT 5.5. I mean, like, you got to either believe the Wall Street Journal that OpenAI is a bubble and it's all going to collapse, or you believe OpenAI and say, look, we're growing like crazy. Maybe we missed some internal revenue metric. I think they wanted to get 1 billion weekly active users. Right now, they have 910 million. It's like, okay, they missed by 90 million people. If they had more compute, they could probably get more people to join. But do we not think OpenAI is eventually going to have 1 billion weekly active? Like, I think that's going to happen. Is Gemini taking some share? Sure. That doesn't mean that OpenAI is going to collapse. And so I'm not even here defending OpenAI. I'm not even invested in OpenAI. But the idea of OpenAI collapsing would be catastrophic for the entire AI sector. And I think it's a big stretch to imagine that they collapse simply because they're not getting a couple of numbers. So that's what we got in the context of OpenAI. SoFi, that has earnings tomorrow. SoFi right here down about 1%. All of fintech getting a little bit of a hit. Robinhood has earnings after the bell. Robinhood as well, down 2.2%. Again, if the broader market takes a hit, that affects Robinhood. Crypto's also been kind of bad over the past couple of days. SPY right there, 711, down 0.5%. We did hit a new all-time high yesterday. If we go down to 710 or 705, we're still above 7,000. And so to me, it's not going to be the ugliest drawdown. If anything, it would be a much needed breather, which is, again, it's just not crazy. Obviously, I would love to see us go up every single day as well. But if we take a break after 3 weeks of a run and consolidate, that is not the worst thing in the world. Air Test Systems was down 7% yesterday. It's down another 8% today. Credo's down 7%. Coherent's down 5%. AAOI is down 6%. That Poet company really ruined the photonics run. 774, that's down 2.64%. It was down 47% yesterday. I'm very curious to see if anyone steps in and buys the dip today on Poet. But that breach of confidentiality that they had with Marvell, with the CFO revealing that they had a purchase order, that completely ruined the, I guess, narrative on Poet. And as a result, all the other photonics plays took a big hit. AXTI fell yesterday. And maybe they don't deserve to be falling because of Poet, but a lot of those stocks had run like crazy as well. I mean, some of those stocks are up 2,000-3,000% in the past year. So are they really worth the level that, people are paying for 50, 70 times sales? Probably not. And this OpenAI headline, along with oil going up, is probably the perfect storm for people to take some more profits here. So not crazy to see. Also, in the context of Poet, dude, I mean, like, this is a company that does a couple 100,000 of revenue. It was trading at $3 billion. Like, it is a good thing to see these things get collapsed because, it is way just like birds when it got to $25 from $2. Now it's back at $6.70. You don't want a euphoric market to the point where this thing is going to $50, $100 because then it's just everything's fake. And we know everything's fake. And I think most of us have seen these types of fake markets way too many times to feel comfortable in that. So the fact that these things are correcting properly, like, it's not the worst thing in the world, in my opinion. It probably gets that money to reset into things that probably do deserve a bid, like a ServiceNow or a Salesforce, which, aren't the most exciting companies in the world, but they do not deserve to be trading at these multiples well when Poet gets a 10,000 times price of sales. So not crazy, but we'll see if people end up stepping in and buying the dip later today. Rambus fell 19%. This stock also had a massive run. They had a good earnings. They didn't have a horrible earnings year to date. Before this print, it was up 42%. Taking a breather right here, down 19% right here. Amcor beat on all their metrics. This stock also down 11%. Let's look at earnings that we had today, which were actually really good across the board, but most of those stocks, unfortunately, took a hit. So Corning, another AI infrastructure play, GLW, that stock is down 9% after being down 4% yesterday. They beat by 1% on EPS. They beat by 1% on revenue. EPS is up 30% year over year. Revenue is up 18% year over year, but the stock was up 70% going into the print. That's why it's down. Galaxy, they beat by 47% on EPS, 49 cents negative versus 93 cents negative expected. They beat by 17% on revenue, 10.2 billion versus 8.7 billion. Unfortunately, Galaxy is a neocloud. That stock is down 2.64%, even with revenue, even with EPS up 43% year over year. Coca-Cola, they beat by 6% on EPS. They beat by 2% on revenue. EPS is up 18% year over year. Revenue is up 11% year over year. Coca-Cola is up 3.4% because as the growth stocks go down, the value stocks get a bid. And Coke right there is getting the bid. That's at $78. But again, a double beat on Coca-Cola. GM, General Motors, the stock has massively outperformed Tesla over the past couple of years. They beat by 41% on EPS, 370 versus 262. That stock is up about 1%. and they beat on revenue 43.6 versus 43.5. Revenue is down 1% year over year, but EPS is up 33% year over year. Again, a double beat or a very slight miss on revenue, even though if that miss was $10 million. Then you had Spotify, which Spotify beat very nicely on EPS. They beat EPS by 17%, 404 versus 346. They beat on revenue 5.3 versus 5.30. EPS is up 231% year over year. Revenue is up 11% year over year. So you might be asking, if they have a double beat, why is the stock down 10%? It's really obvious. And if you're a Spotify investor and you don't know why they're down, then you probably just did not pay that much attention to Spotify. They were trading at over 50 times earnings. And so they took a breather, right? Like, this was just not a company that is putting up the types of metrics that are so phenomenal for this to be able to keep pumping in the way that people think they can pump if they don't put up crazy type of growth. So at 40x trailing on the PE, 8% revenue growth, and a 32x forward multiple, there's a math problem there. Google trades at 23 times growing faster. Uber's at 22 times growing faster. Meta's at 24 times growing faster. So Spotify's a phenomenal business. They beat on monthly active users. They beat on revenue, beat on EPS, beat on adjusted EBITDA guidance. But 11% growth is not enough to be paying 40 times trailing or 32 times forward. I mean, maybe it's enough in some types of markets, but in this market where AI infrastructure is the core story, it's just not enough. So once again, we're seeing a bit of a valuation reset on a lot of these different growth stocks that are not absolutely smashing earnings. And that doesn't mean we're like in a bubble. What I think that means is that some of these stocks, if they are not putting up Intel types of earnings, but they've gotten Intel types of premiums, they're not going to keep those premiums. And if they're not in the hot sector, which in this case right now is AI infrastructure, maybe that shifts to software becoming the hot sector of fintech. But right now it's still AI and semis. Then, those are the names that are just not going to be respected. And I think that is okay. Is it because of European? No. I mean, Spotify's had a massive run. This thing was at $80 in the 2022 lows. It got all the way up to $750. So it has nothing to do with them being European. It has to do with their revenue growth. Spotify's a very mature company. Spotify reminds me of Netflix. Netflix is not growing 20-30% anymore because, everyone in the world has Netflix. A lot of people have Spotify. And if you don't have Spotify, you have YouTube Music, Apple Music. Like, it's really hard to find that incremental user. The fact that they keep finding more and more people to use the product is incredible. But how much earnings growth do you want to pay for that? So all the companies that needed to beat to this morning beat. UPS, they also beat. They're down 5%, but they had a double beat on the top and the bottom. So, it's not really like these companies are putting up bad numbers. They're putting up all the right numbers. UPS, they beat by 5% on EPS, so 107 versus 102. They beat by 1% on revenue, 21.2 versus 20. But on a day where oil is spiking at 100 and, the broader market is afraid of OpenAI creating a massive bubble, yeah, we're going to see some red. UPS is also not growing. That is also fair. They are negative growth year over year on EPS and revenue, even if they're beating on the top and bottom line metrics. So, in this market, if you're not growing that decisively, even if you are growing, but you're not, growing at the level the market wants you to grow at, yeah, you're going to get a little bit of red. Apple is getting some love right here. Usually when a lot of the growth stocks go down, Apple is a growth stock, but, it's not put up massive growth, but it is Apple. It gets a little bit of a pass. Apple tends to be the beneficiary of the rotation when the other Mag 7 tend to fall. Apple right there, 271, up 1.27%. There's no headline on Apple, but it just looks like, again, rotation into Apple. Is the market crashing because of OpenAI? So once again, I don't think the market's crashing. S&P's down 0.6%. Maybe it does crash today. Who knows? But pre-market, I wouldn't say the market is fully crashing. I would say there are individual names that have gotten way ahead of themselves that probably deserve to take a rebound, like an ARM, an AMD, etc. But yes, OpenAI is your catalyst today. This Wall Street Journal headline is enough to get the market to be a bit upset. Yes, dumping is better, not crashing, dumping. But again, like Alex, you're saying WTF, AMD is down 7%. The initial reaction could be a WTF moment, but is it actually WTF? AMD is up a lot. This is the one thing I think all of us have to remember. When these stocks pump in the way that they pump, it's like they're going to get sold off eventually because people will take profits. You can't tell me something goes from 198 to 350 and that's normal. When there's no news, by the way, there was nothing substantial. AMD didn't say anything outside of their partnering with France and Macron.
Intel put up earnings. AMD didn't put up those earnings. Intel did. So, like, yeah, WTF, AMD has been up for the last 18 days, going up like 2% every single day. That's the real headline versus AMD's down 7%. Now, it's annoying. I get it. Like, I totally understand. If NVIDIA was down 7%, that would be upset. Now, NVIDIA hasn't had the run that AMD has had, but I would also understand because NVIDIA is at least up from 160 to 280, 18. And if it wants to take a breather, it's going to take a breather. AMD is up from 195 to 350. There's the breather that I think we're seeing happening right here. WTF, Amazon is down 1%. Yeah, Amazon, unfortunately, has just not been able to break out. I mean, it got above 265, but every day it finds some reason to come back down to the low 260s here. But it's still up from 190. So, I hate being the guy to be like, well, if you look at it for the past month, it's up a lot. But sometimes we all need to have that reminder. Because even Amcor, which demolished earnings, like legitimately demolished earnings, they raised CapEx a little bit. Street got upset, down 12%. Okay, it's back to prices it was at 2 weeks ago, still up 40% from a couple weeks ago. Now it's not up 80%. It's like, I get it. If you bought Amcor at 80, you're not happy about that. But there's some level of humility that everyone needs to have to realize, okay, look, and I've been a victim of this so many times. Hey, I'm not going to buy into this much strength because the stock is up a lot in the past couple of weeks, not in the past couple of months, the past couple of weeks. I'm going to relax. I'm not going to buy Nebius at 165 after it was at $80 a few weeks ago. I'm just not going to do that. Maybe that's a good idea. You don't have to be a genius investor to be like, I'm going to sit this one out of it. Nebius back to 137. The market always gives opportunities. And today we'll see if the bulls come in and if they continue to end up buying these dips. Nebius right there, 137. IGV almost going green on the day. Oracle, that's down 6.63%. And then you've got CRM that's pumping as well, 1.34%. As that is green. Where is Netflix? Netflix, did we go below 90 yet? Netflix, we'll talk about oil in a second. Netflix still above 90, 91.89, up about 0.57%. Okay, so again, the reason oil is pumping is because the UAE is leaving OPEC, which again, their logic for it is that they're going to be able to produce a lot more oil on their own. Maybe there's a deeper story to why they're leaving OPEC, but that immediately is, causing that reaction in the oil markets. I think the other reason, I don't even think it's really UAE. I think there's just been no progress on Trump and Iran. I mean, you had some headlines yesterday saying that they're reviewing different options and that they're going to reconvene in a couple of days, but the lack of progress there at the market kind of, being in the blind in terms of the uncertainty around what's actually happening with the negotiations. I think that's probably the reason oil continues to climb, because it was climbing yesterday as well. And so it seems like, that could be the argument for oil going up. Ryanair CEO says that if the Middle East war ends soon, ticket prices from April to June could increase by more than expected 3 to 4% due to high demand. Again, airlines and cruise lines, I imagine, are getting hit the worst today. We didn't take a look at that. Let's see. Airlines, AAL, is that down? Yep, that is down. United Airlines is down. All your cruise lines are likely down given the price of oil is spiking. CCL is down. Yeah, I mean, this is obvious, right? Oil going up, especially back above 100. These names are going to be the worst hit of it. Poet down another 4%. I am really curious to see if this thing just collapses to like $4 or $5, which I don't think it will, or do dip buyers step in. But I mean, the type of rug pull that has been initiated on that stock yesterday was just, it's what happens in a bull market, right? Some of these names just get absolutely demolished, but it also is a major lesson to people. And I've been, a victim of feeling those lessons before in the past as well, of just like, there's sometimes due diligence that's really involved before going knee deep into a name. Bed Bath & Beyond, they're up 30%. Why? They crushed on earnings. This was typically a meme stock, but this was their first quarter of growth in 19 quarters. So in about 3 years, they finally accelerated growth, and that's why that stock is up 30% right here. I don't know if it necessarily deserves to be up 30%, but the street is taking it up 30%. Retail's probably piling in as well. But they did beat on all their metrics, and so maybe a turnaround story is possible for Bed Bath & Beyond, but that stock right now is also green based on what we had yesterday. Celestica, in my opinion, doesn't deserve to be down. I don't know that much about this company, down 15%, but they beat on every single metric you could ask for, including Q2 guidance. But it was up 40%. Now, I think 15% is a little aggressive right here. Just like I think Amcor, 11% or 12.5% is a little aggressive. But again, I can't be that upset given, the names were up as much as they were up. Oracle, again, getting hit because of their relationship with OpenAI, and then that's unfortunately affecting Nebius and CoreWeave as those are getting hit. Some other macro stats. So we talked about earnings. We talked about what's going on with AI. This was another thing that was really important to look at. Hedge funds have been selling semiconductor stocks. So I showed you guys a stat yesterday about hedge funds selling information tech in general. Investors weren't just adding to the shorts on semis, SOXS, on the SOX ETF, but they also pulled the second largest weekly amount ever last week, a week after putting in a record amount. So in October of 2025, as you can see on the screen, that orange candle to the downside, that was when we had the soybean and crypto glitch. You had hedge funds sell off the semis aggressively. And then the black candle towards the end of the chart is once again, not as aggressive as October, but hedge funds taking out some money from the semis. This makes sense. If you're a hedge fund and you bought AMD at 300 or 320 or 335, and it went up to 350, like as a hedge fund, you don't have any long-term thesis. You are taking that money and you're running. And so part of the other reason I think we're seeing a bit of a collapse right here in the pre-market is because there's a lot of institutions that are like, dude, I just made 10, 15% of my money in a couple of days on a large cap where I have instant liquidity, where I can sell this thing at 350 and someone's actually going to buy it. I can sell ARM at 235 and someone's actually going to buy this thing. I'm out. I'm taking my money and I'm running. And it's happened time and time again. Then you put the catalyst on an OpenAI headline to spook the entire markets and you really get a major sell-off here. Boom. That's the story of the day. Is that a bear case for semiconductors or for AI? No. Does that explain the short-term price action? Yeah. And I don't think that short-term price action, is really that complicated. It's just people are taking profits. Like I really don't think it's much more complicated than these names have had too much of a run. I think all of us felt it, right? I mean, all of us felt, okay, this is getting, 18 straight days in a row, most overbought since 2000, Intel at 100 times earnings. Intel, by the way, it's down 5%, but Intel's still up over 100% for the year. So down 5% is literally nothing. But for the people that bought it at $87, $88, it's like, it's time to reassess. Was that the best time to buy this name? Give the multiple it was trading up. And it's not crazy to imagine some of those names are, taking a bit more of a breather. So that's what you got, at least now. SanDisk is invincible. This thing just doesn't go down. So it's only down 3% in the pre-market. It feels like I think they got like a $1,400 price target the other day. Micron got an $825 and $1,000 price target. Micron as well. It's down 3% at 506, hit 530 yesterday. Let's see if it can defend the 500s, but your memory stocks at least have been doing the best so far, and they've been playing it out. Jay Takes, thank you for the $5 super chat. What do you think about Hood earnings? Clarity Act is 50-50 for this year. Trump account is getting attention. Any other major catalyst to get going on? I don't think the Clarity Act is a catalyst for Hood. I don't think the Trump accounts are a catalyst for Hood. I think those are long-term things that are good for the ecosystem that Hood is involved in, which is cryptocurrency and obviously asset accumulation. But I don't think them adding even 1 million accounts with $1,000 each is going to do anything in the short term. In the long term, all those assets being generated on their platform is going to be very bullish. They're going to have all these people that eventually grow up, turn 18, are going to start using Robinhood, et cetera. That is not going to affect the earnings. And I will say what I said yesterday. I do not fully believe that the Hood numbers are going to be good today because we've seen the numbers already. And when you do the math, it's not that impressive. Like, it's just not. We looked at the math. It's not that good. IBKR's numbers were not that good. I don't know how Vlad is going to surprise today, if there is a surprise to the upside, in the context of like gold subscribers or prediction markets. But based on the calculations I've done, and Roy and Tanner feel the same, and we'll be live at 3:45 today to cover the earnings, the numbers are not going to be the best. So I am hoping the stock stays flat. If it goes up, I would be very happy, because I can't see, based on the numbers they're going to put out, for this to be some explosive beat like it was last year. Again, they've got to beat $1 billion. Last year, they had to beat 600 million. It was easy to beat 600 million. It's harder to beat $1 billion, especially when we have a pseudo bear market for the first quarter of the year. And so I don't know what to expect, but I'm not having my hopes up for Hood today. So for anyone who wants to do an earnings play, just know that you're going into an earnings play for a company that probably didn't have the best earnings for the first 3 months of the year. And I think we're gonna have to see what numbers they end up putting up. But it just shouldn't be super surprising, right? Like that's the most important. I don't know if they could have an Intel type of quarter, because we've already seen their numbers. So time will tell. Obviously still a long-term investor in Hood, but they go up and down with the market. And so far this year, the market's been choppy, which means their earnings might be choppy. And that's what we're gonna have to see going into earnings. Navius right there now down 4%, 138.96. as that is also down. Tesla did get a rebound. It was at 360 yesterday. Now it's at 374. So at least it got that rebound down from 378, which is where it closed last night. So at least it did get that big of a rebound. Now, here's the other reason why OpenAI is selling off right here. This is kind of the main analysis from Bloomberg. There's a couple of different risks that are in play on OpenAI. There's an operational risk because of missing revenue and user targets. There's a competitive risk, DeepSeek's dramatically lower pricing and rapid adoption. And there's a structural risk, the lawsuit that could alter its corporate firm. Elon would get $134 billion in damages if that were to happen. All of these could complicate an IPO. And there's a good chart right here that if your stock is exposed to Alphabet from a data center AI perspective, it is done very well. If your stock is exposed to OpenAI, it's done not as well, Oracle being one of the key candidates right there. So again, I think the Wall Street Journal article this morning was a whole lot of FUD because it's not repeating anything that was new, but it was FUD that was likely needed for the market to finally take a bit of a breather. They needed some reason, or you couldn't just wake up and have AMD down 7% for no reason. And this was your reason. AMD was going to give 10% of their company to OpenAI. Now, if OpenAI is a bubble, supposedly, boom, AMD should be down 7%. Oracle should be down 7%. And that's kind of the major reason why I think we're seeing a bit of a sell-off right here. Bitcoin as well, unfortunately, losing 76,000, hit 75,994. That is also not good for Hood, Coinbase, MicroStrategy, etc. And that stock is also right here, taking a breather. Mamba, thanks for the super chat. Is a prediction market a hidden revenue catalyst or not enough to move the needle? Appreciate you, bro. I don't think so. We saw the numbers on prediction markets. They were good in April, but I do not think they're going to overcompensate the lack of crypto revenue and lack of options trading that happened in March. So I think prediction revenues will be good. I don't know if it's going to be the major story. And so, yeah, unfortunately, I just don't see the numbers being the best right here. Now, again, Vlad can say, well, we added way more gold subscribers, or we did this, or we did that. Like, and there's something to, I mean, and it's not just me. All the analysts have reduced their expectations from 1.27 billion to 1.14 billion. So the analysts as well on the institutional side have taken down their targets, which is good because it hopefully won't be a surprise if they come in lighter than expected. But nonetheless, I don't think the catalysts are that strong to keep it up there. AMD right here, 311. All right, we got a minute 30 as we head into this. I think we were all expecting a red day. We ended up getting a red day right here pre-markets. Now, if we flip green today and the bulls actually come in and save the day, it would be quite incredible. Again, there's a lot of ugly headlines right here in the pre-market with oil and OpenAI, so it would be hard to imagine fully flipping green, but we've seen a flip to green over the past couple of weeks. A few times now, so maybe that happens. Bank of America raised their price target on NVIDIA to $300. They say NVIDIA trades at a 30% lower market cap to free cash flow multiple as investors remain uncertain on growth and durability. Their free cash flow will roughly be equal to Apple and Microsoft combined for fiscal year 2027, which would be $400 billion. So you've got the street coming out and saying, look, NVIDIA is still cheap right here. We think this thing deserves to be much higher. But this OpenAI headline, unfortunately, has caused a bit of ugliness going into this market open. All right, here we go. 20 seconds. Powell will speak tomorrow. We'll have earnings tomorrow. Let's see if the bulls can step in and maybe change a little bit of the narrative today, or if this OpenAI article is enough to take us down. And if it does, we'll have earnings tomorrow to see if we can recover from some of this red. Here we go. Tuesday, April 28th. 9:30 a.m. Once again, the stock market is now open. All right, wake your ass up. Let's get into it. SPY opens down 0.5%. 0.5% on the SPY. 7-11-16, that's down 0.57%. Galaxy down 2% after a double beat. General Motors down 1% after a double beat. Spotify down 10% after a double beat. Amazon down 1.3%. Netflix down 0.5%. American Airlines down 0.3%. Celestica down 17%. Again, I don't know this company this well, but from the top line metrics I saw, they beat and they raised decisively, by a couple $1 billion on revenue, and the street's still not happy with it. Down 16%. Carnival down 1%. United Airlines down 0.5%. Nebius down 5.4%. Oracle was down 7%. Now it's only down 5.7%. So maybe a little bit of a rebound there. SanDisk down 5, Micron down 4, Robinhood down 3, Micron below 500, SanDisk below 1,020. Intel was down 5, now it's only down 3. ARM was down 8, now it's only down 7. So maybe a little rebound there. Apollo is up, KKR is up. Your private credit names are indeed up. Palantir, are we getting a dump? We are down 1%, not too crazy on Palantir. IGV is green, which is good to see. ServiceNow is also green, which is good to see. Salesforce is green, which is good to see. Maybe a rotation from semis to software today, which for everyone holding semis, that would not be the worst thing in the world. Trump just tweeted literally 1 minute before the market opened. Iran has just informed us that they are in a state of collapse. They want us to open the Hormuz Strait as soon as possible as they try to figure out their leadership situation, which I believe they will be able to do. Thank you for your attention to this matter. Iran has just informed us they are in a state of collapse. They want us to open the Hormuz Strait as soon as possible as they try to figure out their leadership situation. Tweeted at 9:29 a.m., right before the markets open. Not bad timing, Mr. Donnie T. Okay, the reason I think he's actually potentially right about this is because there has been lots and lots of reporting that different Iranian factions are infighting with each other. The IRGC has more control than, you say, the parliament, the president has more control. Maybe the people we're negotiating with literally came up to Trump and Vance and Witkoff and Kushner and said, guys, honestly, we don't have control anymore. There's a lot of shit going on in our country. You know, we wanted to negotiate round 2, but we can't because there's all this infighting. So if you guys get rid of the blockade, we might be able to open this. Like, maybe that's what's happening right here. Or maybe Trump is just, you know, bragging about something that doesn't exist. We don't necessarily know. SoFi going green, but hopefully we find out. I think there might be some truth to what he's saying simply because of all the reporting that the Iranians are fighting with each other, which is what has stopped the progress on negotiations. And I guess time will tell, hopefully, over the coming days if the Strait of Hormuz actually opens. NVIDIA 210, that's down 2.7% right there. Meta 673, that is down 1%. CoreWeave down 7%. That is also down on the day. Verizon actually going green. Joby's up 4.6%. Poet not completely dumping. Actually trying to flip green, 793. But we'll see if that one goes up. Trump could just be saying this because he wants the market to go up. Yeah, that's also fair. I mean, maybe Trump is just trying to give a narrative out there that the U.S. is in control right now. I think all of us will have a better understanding of what's going on. Bitcoin right there, 76.1. Once we get an official confirmation of if the second round of negotiations have started. Trump did say over the weekend that he is not going to send people to Pakistan anymore. They're going to do it over the phone. They're getting kind of tired of all the traveling, which likely makes sense because the traveling is not resulting in anything substantial. So at this point, we're either going to have a framework of a deal and an eventual deal that's being signed, or it's just going to keep going on and on. And until then, you know, I think we're all still going to be in a speculation stage. NVIDIA 210 still holding on. Micron rebounding above 500, which is nice. Lending Club, they also crushed earnings. Absolutely crushed earnings. Lending Club deserves to be up 5.94%. They beat on the top and the bottom, raised their guidance. Loan originations were strong. That's a good sign for SoFi. So hopefully that's going to help SoFi as well. Intuit is also up. Intuit right there, 400.99. That's up 2.64%. That is green. Tesla, is that also green? Tesla is about to go green, 377. It's trying, but not fully green yet. Zeta, you're getting a bunch of SaaS names. Get some love. Zeta is green. Palantir, almost green, but not green yet. Software across the entire market is green except for 2 companies. Snowflake, which is like 10 cents from going green. There it goes. Snowflake went green. And then Oracle, which is down for a different reason outside of software. It's down because of the data center play. But Adobe, that's up. Zscaler, CrowdStrike, Intuit, Twilio, Datadog, Palantir is about to go green. Team, Atlassian, MongoDB, all of those green on the day, which is nice to see. AppLovin, unfortunately, is not. AppLovin's down, but it's only down 1%. We'll see if that one flips green. Fastly also had a nice day yesterday, up 9%, up another 3% today. So that one getting the rebound with software. Again, it's seen more as a SaaS name than a AI infra name, even though it kind of plays a role in both. Open Doors up a little bit on the day. PayPal, that's up a little bit. Snapchat's down. SPY, 711.63. 711.63. Poet getting your 5% rebound. 750 to 830. Again, I don't know who's legitimately buying Poet after the reason for why they collapsed yesterday. I mean, if you're buying the stock, you have to fully believe that the CFO is like, or the management team knows what they're doing. And if the CFO can't keep his mouth shut on a podcast, that gives me a lot of red flags. The CEO, by the way, owns 7,000 shares. So he owns 50 grand of the stock. So at this point, I think retail is in control if they're going to take it up or down. But fundamentally, I'm not sure if it is the most exciting here at the moment. Also, on top of that, even if the CFO did violate like a confidentiality clause, Micron right there back to 512, getting a really good rebound. If the tech is so good, would Marvell really cancel an entire purchase order because of the CFO having a loud mouth? Like, you would think if the tech is so unbelievably powerful that Marvell would, keep the purchase order and just maybe negotiate with them to not say that stuff in public or something, right? But it is very weird how this entire story played out. But right now, that stock getting a rebound up 5%. Amcor, it was down 15. Now it's down 5. It was down 15. Now it's down 5. Reddit, unfortunately, was up 7 yesterday, down 6 today. So some of your high beta names not getting some love. Rocket Lab, are we green at all? Rocket Lab, we are red, 80.9, but at least it's not as bad as it was on Friday when we were below 80. Salesforce CEO Mark Benioff says AI won't take away entry-level jobs. The company is hiring 1,000 fresh graduates to back this up, according to Fortune magazine. Salesforce right there getting a bit of a pump, up 2%, 182.94. As that is also green. AMD also not as bad. AMD was almost at 305 this morning. It's at 322. So bulls stepped in. They're not letting this get below 300 as easily, not even below 310. 323 right there, only down 3% after being down a lot worse than that in the pre-market. ARM was at 198. ARM is at 203. Got people coming in. You got people coming in, at least to an extent. Is HIMS up? HIMS is down 2.3. HIMS not able to hold on to this. Oscar as well, that's holding up as well. Oscar 1725, that was at 17 yesterday. As that continues to go green. NVIDIA 210.50. So again, the OpenAI headline, it makes sense why there was a immediate sell-off there and a knee-jerk reaction. And I think probably, a lot of these stocks got overextended. But is AMD going to give you 250 again? I don't think so. Does that mean it deserved to be at 355? Probably not. And so you're getting somewhere in the middle at 320, which is kind of how a healthy market should be consolidating at. You're not too high, not too low. And if you bought the dip when it was really low, you get the benefit. If you bought when it was really high, you get the pain of it. But it seems more reasonable than being super low or super high. CoreWeave right there down 5. Iren down 5. Qualcomm down 3. Qualcomm had really no reason to pump yesterday. OpenAI tapping them to help make an iPhone or a version of an iPhone is not really a reason, in my opinion. But this one getting a bit of a rebound, still up 11% from a couple of weeks ago, as that one continues to go green. Rambus down 20%. Cadence also crushed on earnings. They were down 5. Now they're only down 1. They were down 5. Now they were down 1. Galaxy also massive earnings. I mean, out of all the neoclouds, I don't think Galaxy deserves to be down today. It's nice to see this one get a bit more of a rebound as well, up 0.74%, 25.24. As that one continues to go green. Robinhood 82.09. That is also down 2%. Is Beyond Meat pumping? Beyond Meat, kind of. Like the difference between Beyond Meat and Bed Bath & Beyond, they were both meme stocks a couple years ago. Bed Bath & Beyond just crushed earnings. So, maybe they deserve to be up 26% because they really did have great earnings. Beyond Meat did not have a good earnings a month ago. So this one pumping, feels a bit more euphoric, whereas Bed Bath & Beyond, you can at least justify why people might be more excited about the name. NVIDIA back to 211. We hit 218 yesterday or 217 yesterday. So we'll see if this one can actually flip green. It would take a couple more bucks to get there. Oklo, is that down? Oklo is down 6%. Some of the nuclear names that were green yesterday now taking a bit more of a beating. SNMA, Sanmina. This one also up 20%. They crushed earnings as well, up 12 billion, or market cap at 12 billion. Again, some of these names not really making a move this year. Others already made their move, and they took their hit. So Sanmina now going into the print was only up 20%. I say only year to date, but relative to Amcor, which was up 80%, now Sanmina is up 42%. Amcor, even after the dip year to date, is up 67%. So some of them that were just kind of priced to perfection, obviously, taking a bit of a rebound. Marvell, are we recovering? Marvell 153. Yeah, this thing was at 146 pre-market. It is going to be quite funny if we flip green today. That doesn't mean we have to get Marvell back to 175, but if Marvell gets to 157, we flip green. And it would mean this Wall Street Journal hit piece was just not enough. Nebius was down at 133. Now it's at 139. So there you go. Poet up 10%. Again, I'm just going to say, if you're buying this name, I think you're buying it on momentum. I don't think people have a real thesis on this. If you're buying it on momentum, then momentum hits both ways. So I don't know if this thing goes back to 17. If it does, that would be quite incredible. But a 10% rally after a 60% haircut is actually to be expected, usually when a stock declines. The question is it a game of musical chairs, or is there something fundamental to be excited about when it comes to Poet? But that stock getting a rebound right there, 9% up on the day. Rocket Lab still at 80. Even Bloom, which had a massive run after hours yesterday because of more details that got exposed around their Oracle partnership with their fuel cell technology. That was at 238, fell to 227 pre-market, right back to 235. NVIDIA, 212. There you go. I mean, dips are indeed being bought. SoFi trying to flip green. Lending Club up 5%. The doom and gloom narrative of the pre-market, again, just wasn't that strong. But nonetheless, yes, some of these names are obviously not where they were even a couple of days ago. S&P 712, high of the day on Mr. S&P. Even Celestica, which was down a lot, not down as much. It's only down 8%. It was down 15, 350 to 388. Look at that green candle coming in. Marvell now only down 1.6. Corning was down 9. Now it's down 4. CoreWeave was down 7. Now it's down 3. The bulls aren't easily letting this collapse. They're just not. And I think that's not only healthy, but it's one of those things that proves we're in a bull market. I mean, it's kind of healthy in both ways. It's healthy that we've had a bit of a retracement from ARM 240 to 198. But it's also healthy that there's enough people that are willing to step in on that dip, because that's a real dip, 240 to 198. Now, you may disagree with the valuation of ARM even at 198. That's a fair point. You may disagree with the valuation of AMD even at 309. But 350 to 309, that is a dip. At the end of the day, like, it's a stock market. People are going to buy when they see, if they're interested in a company, when they see a $50, $70 downside move. And so the fact that people come in, algos come in, institutions come in, even on that dip, it doesn't mean AMD has to run back to 350, but it does mean that people are willing to buy the dip, which has been kind of the story of the past 4 years of this bull market. Do people buy the dip? Zeta right there, 1811. And then if the earnings can support the buying of the dip, that's where you see a real bull market start to take place. Coca-Cola up 5%. Coca-Cola up 5%. And can you expand on why you're not interested in Netflix here? I just don't think they have any growth that's exciting. And the last earnings pretty much showed it. They only beat earnings because they have the breakup fee. The breakup fee is going to be spent. I mean, they already spent $600 million out of the $2.8 billion on some AI studio with Ben Affleck. Like, to me, I just think they're throwing money left and right and not really getting the type of content that people care about. Subscriber growth is not improving. Advertising growth is cool, but advertising can't be the real story when there's so many better advertising plays. They don't have content. It's just that simple. They're oversaturated and they don't have content. That doesn't mean Netflix can't do well, but that earnings was disgusting. There was nothing to be excited about. And if they didn't get that $2.8 billion breakup fee, they would have missed earnings or they would have slightly beat. So I just think Meta is way more exciting than Netflix right here. Amazon is way more exciting than Netflix here, right? Like, I think there's plenty of other opportunities that feel bad. I think the real dip on Netflix was 70. Congrats if you bought it there. But at 90, it's not like the most exciting. So yeah, that's why I'm not buying Netflix. CoreWeave down 4. That one trying to get a recovery. Mike, and thanks for the super chat. A lot of money on the sidelines looking for it. Well, that's the other good point. There is tons of money on the sidelines, whether it's cash and high yield savings or money market funds that, they've been waiting for a bit of a dip. And if they weren't going to buy AMD at 350, maybe they'll buy AMD at 320. Now, you might say 350 to 320 is not that big of a dip, but it just was at 309. And if they miss their opportunity there, they might be afraid they're not going to get it back at 309 because there's not going to be a Wall Street Journal FUD headline piece every single day that drives the stock market down. And so this might be their opportunity. Same thing with NVIDIA, Marvell, all these other names that, have taken a beating over the past 2 days. Palantir flipping green, 143. There you go. Palantir joining the SaaS party. Intuit up 2.7%. Like the number one thing that we've been talking about over the past couple of days is that the bulls are in control. And a headline from the Wall Street Journal doesn't take the bulls out of control. It creates fear, uncertainty, and doubt, which may make it seem like the bulls aren't in control because stocks go down. But the bulls are still functionally in control. 84% of the 30% of companies that have reported earnings, including every single company, UPS, Spotify, Coca-Cola, GM, that reported today, have double beat on earnings, revenue and sales, revenue and EPS for the past 3 weeks. So, like, you couldn't ask for a better start to the earnings cycle. It's just the semis got ahead of themselves and they're taking a break, which, again, feels healthier than not. NVIDIA right there, 211. 211. Spotify, unfortunately, can't get any love. 15% down. Does anyone own Spotify? Put in the chat if people own Spotify. UNH right here, 359. That's up 1.43. Tomorrow changes everything. That's another good point. I think there's a good sort of reason for the market to sell off right here. There's a lot of pre-earnings jitters going into tomorrow, which again, I think is a good thing. You don't want massive euphoria going into the biggest day of earnings we've had all year. You want some skepticism. You want a little bit of hesitation so that when these companies absolutely demolish it, hopefully, the stocks have an even better reaction to the upside, getting back to levels and premiums that they deserve to be trading at, not 22 times forward earnings in the case of Meta. So I actually think if you're a holder of Meta, Google, Microsoft, Amazon tomorrow, you should want a little bit of skepticism going into the print. Like, it's just always better when a stock sells off going into the print versus if a stock pumps, because more often than not, the pump is just not enough after they put up numbers, whereas the dip is seen as an opportunity after they put up really good numbers. Palantir 143.74. 143.74. App Lovin right here, 461. That has also now flipped green. I see like 4 or 5 people own Spotify. I don't think a lot of people here own Spotify. Do you think Oracle's a buy? Yes. If you think Oracle is going to get all the RPO that they're getting from OpenAI, if you believe the Wall Street Journal headline, no, because Oracle's not going to get paid. If you look past the Wall Street Journal headline and think it's nonsense, then yes, Oracle's a buy. I mean, it's cheap. They're growing. They're trading at multiples that have been the lowest over the past 5 years. They do have negative free cash flow. They do have a lot of debt. Those are your 2 headwinds. But, if you have a thesis that mitigates those 2 risks, which are large risks, but obviously there's a substantial growth that's combating those risks, then yeah, I think, and if Oracle's a buy, Nebius, CoreWeave, Iran, right, these are all buys as well. Now, they might not be the best prices on CoreWeave and Nebius in particular because, Oracle really hasn't run. CoreWeave and Nebius have had massive runs, both of them up basically double. CoreWeave from 60 to 120. Nebius went from 80 to 160. Oracle hasn't done that, so it might be more attractive here on a momentum basis. But all these names likely still have much more compute constraints than not, which is good for demand versus supply. NVIDIA 212.20. NVIDIA 212.20. UBS raised their price target on AMD. Okay, what price did they give them today? Let's see. They give them the 300s. I'm seeing a lot more 300s for the AMDs of the world. UBS, 455. Wow. 310 to 455. Forget the 300s. 455 is what you've got on UBS, or what you got on AMD. By the way, does anyone find it a little weird that Microsoft pulled out of their OpenAI exclusivity agreement yesterday, and then today a massive headline drops that essentially paints OpenAI as the biggest bubble in the world and goes viral? I find that a little interesting, to say the least. I think maybe Nadella knew yesterday was the best day to get out of his OpenAI overhang, which again, they're still going to have a very close relationship, but it's just not going to be exclusively tied. So that a bad piece of OpenAI news doesn't really hurt Microsoft. But it's just, I don't know, after covering the market for the past couple of years, and a lot of people have been following markets for decades in the chat, like a lot of this stuff just seems more calculated than not. Why did this Wall Street Journal headline drop yesterday? Why didn't it drop a couple of weeks ago? Why is it regurgitating the exact same stuff that we've known for a long time? And why is it coming right after OpenAI raises $122 billion? I mean, like, this is just the nature of how the media operates. And many times the media does not have an incentive to report the truth. They have an incentive to work in the interest of their political agenda or, quite frankly, their financial agenda. And it creates opportunities. The question is just if the bulls step in and potentially allow those opportunities to flourish while we can maybe flip to green. App 11 right there, 460. Salesforce, 183.50. Nadella and Altman discussed compromises after disagreement on OpenAI's AWS agreement over several meetings recently. So Jassy is going to have an event in San Francisco, Amazon event. I believe, I don't know if Sam Altman's going to be there, but OpenAI is going to be there. And it looks like the reason Microsoft and OpenAI also split their ties is because they couldn't come to an agreement on the exact, essentially, level of exclusivity that OpenAI would have with Microsoft Cloud. So Microsoft doesn't have to share revenue anymore. OpenAI doesn't have to use them as the only vendor for cloud computing anymore, which is why I think OpenAI and Jassy are going to be having this live event today. Also ironic that, OpenAI conveniently is going to be in San Francisco for the AWS event a day after they went non-exclusive with Microsoft. So again, a lot of just seems more calculated. More calculated than not. By the way, there was a scam Altman meme coin that was up 8,000% yesterday. So it's now up 5,000%. But if you got in early, congrats. It was a 13 million market cap, and it went up 8,000%. I did not end up participating in this. I found out after it was up 8,000%. If I knew it was going to go up 8,000%, I would have probably threw in a few bucks, but I did not know that. I wish I did. But yeah. Generational wealth because of scam Altman. Spotify, still down 13%. Still down 13. MicroStrategy down 2.7. Rare Earths down 3.2. Oh, wow. FCC prepares review of Disney's TV licenses. Oh, boy. Do people know why? We didn't cover this story yesterday, but there is a reason why, conveniently, the FCC is reviewing Disney's TV licenses. Disney owns a news organization called ABC, and they also produce a TV show called Late Night with Jimmy Kimmel. And Jimmy happened to say some stuff 2 days ago on the show that, let's just say, Trump wasn't a fan of. And this is the second time that Kimmel's been in hot water. So ABC didn't really say they would do anything about it. And now it looks like the FCC is going to be potentially doing something about it. So there's the headline right there. Where's Disney stock? Disney down about 0.5% right here. Iranian state media. Iranian army spokesperson says, we do not consider the war to be over. The situation is still considered a war, and the bank of objectives and equipment for the armed forces has been updated. Okay, that's actually kind of funny. It's like, guys, we're still fighting. It's still a war. We still have all of our guns. We're still going to fight. It's like, dude, it's over. It's done. Like, there hasn't been a bomb thrown for 3.5 weeks on both sides. Like, this is not a war anymore. This is a stalemate. It might go back to turning into a war, but I mean, the Iranian state media trying to get everyone to believe there's some massive war going on. I'm not buying it. And the stock market's definitely not buying it either. Because if there was, we wouldn't have pumped $8 trillion of market cap over the past 3.5 weeks. So I think we're at an impasse, unfortunately, and eventually it will be resolved, but I don't think we're still massively in some crazy war right here. Tesla, are we still green? Tesla 377 trying to flip green just below 378. It's still technically a war. Yeah, technically it's fine, but practically, I mean, like, if this was legit as bad as it was in March, we would not have the market reacting like this. Like, it's just that simple. Because has anything really changed with NVIDIA from 211 to 165? No, nothing. Like, there's nothing. There's nothing that has happened in the past month that would get you to believe NVIDIA shouldn't be 165. It should be 211. It's just this massive overhang doesn't feel like an overhang anymore, which was the war. I mean, crude's back at 100 and NVIDIA is still holding these levels. So even with oil pumping, the market is once again discounting that this war is not as serious. Crude, by the way, just below 100 now, 99.7. And that's why I think practically it doesn't feel like a war, even if technically it is a war. Oscar 1720. That is still green. Solaris Energy, they had a great earnings yesterday as well. They crushed it. That's up 10%. SEI, $5 billion market cap. That is also green. Bitcoin below 76. That's down. Navitas, that's selling off today. Navitas is down 12%. Again, I don't know this company that well, but can anyone tell me why it pumped from $8 to $19? Because I know they had an NVIDIA headline a while ago, which got them to pump, but that was many, many months ago. So once again, if there wasn't a real reason it went from 8 to 19, then there doesn't have to be a reason that it went from 18 to 16. Like if a lot of these names just ran up, it's a $3 billion company. It's not a massive company. If a lot of these names just ran up because everything was running up in the semiconductor space, then if the semis start falling, yeah, the smallest names are going to get disproportionately hit, which is, I think, what we're seeing. APLD, that one also down 4.5%. Celestica still down, not as down as much as it was before, but not getting a full green rebound. Oh yeah, they hired a previous employee from Broadcom. Thank you. That was the headline. That was the headline a couple of days ago. Like, yeah, we got to be honest with ourselves. Like sometimes, those are, given its market cap, yeah, that could move the stock. But is that the most substantial reason in the world for a company to be up 50% in a week? It's like probably not. Whereas Poet being down 50% yesterday, yeah, if the CFO breaches a confidentiality clause, you can imagine people get super bearish and don't want to be in that name. Especially if, the name ran for not much of a reason either. Amazon 259. 259. What do you think is going to happen with SanDisk up 3,000% in less than a year? So SanDisk is a little bit more of an interesting situation. They actually have earnings growth, and their forward PE, similar to Micron, is incredibly cheap for the growth that they're putting up. They also have pricing power when it comes to DRAM. So although SanDisk has gone absolutely crazy and the chart looks like a meme coin, I mean, there's real growth there. It's just so many people, including myself, missed how cheap the growth was being treated at and how much the multiple is now getting an expansion. I mean, Micron's forward PE is still 6, even after the run to 511. It's still 6. So again, the cyclicality narrative is what potentially doesn't let it get to 12, but it doesn't mean Micron's run or SanDisk's run is fake. Now, that's one perspective. If the perspective is, hey, are you going to buy SanDisk from Micron after they're up, 3,000%? It's hard for me to do that. But on a fundamental basis, I don't blame people for doing that if they're just purely looking at earnings and saying, look, I get the stock is up a lot, but the earnings justify, why the stock should be up. Nokia up 3%. Again, Nokia, I think, is also simply pumping because of the NVIDIA relationship. There has been nothing fundamental about Nokia over the past couple of weeks. Remember, the stock was $6 when Jensen announced the partnership. So from 6 to, I think, 10.50, it's already run. From 10.50 to 11, this is more so hype around semiconductors in general working with Nokia. Maybe Verizon's earnings were enough to get the street excited about Nokia because Verizon mentioned a bunch of stuff about 5G and 6G infrastructure. So maybe that, that could be a potential tailwind. But Nokia themselves, I don't believe, has announced anything in any meaningful capacity. And if they didn't get the Jensen investment, this thing would still be stuck at $6, right? So that's also the most important thing to take a look at. Bed Bath & Beyond up 5.7. That was up 30. So that one getting a haircut. Still green on the day. Beyond Meat up 2. Robinhood 82.20. Nokia needs to bring back Snake. My sister, she downloaded like a version of Snake off the App Store. And I saw her playing it there. I was like, what are you playing? She's like, oh, I'm playing the game I used to play on my Nokia phone. I was like, that is hilarious. That is absolutely hilarious. Coke, is that still up? Coke is still up 5%. 5% as that is still green. And again, I think there is a thesis there for Nokia. It's just, once again, in a type of bull market that we're in, people start getting excited to just buy stuff for the hell of it. And, even if the earnings are good, but the multiple is not potentially amazing, trading at 67 times earnings, like, is that enough that you want to pay for the revenue growth? Maybe. But when there's excess capital and there's people that are more excited, they tend to take more risk, which is what we saw with Poet. I mean, this thing doesn't go from 6 to 17 unless there's money out there that's willing to just bid it up. But that's also conducive of how a bull market operates. ServiceNow, that is up 1.2%, as that is also green. Kyle Brown, thanks for the super chat. And Mick, can you send a shout out to Chris Amas? It is his birthday today, longtime listener, and he got me into all of this, and now I watch every day as well. Chris Amas, thank you for getting Kyle into the Market Open. Appreciate it. And thank you for being part of the show. It's super cool how many people find the content through other people. And, their friend recommends, hey, take a listen to this, see if you like it. And then people tune in. So I deeply, deeply appreciate anyone who sends the content or the show to people through word of mouth. And thank you everybody for being here. We have consumer confidence, April consumer confidence. Let me pull it up. It is a beat 92.8 versus 89 for consumers in the month of April.
High watermark of the year. You have to go back to the last month of 2025 to find a higher number. 123.8 present situation. That's over 3 points higher than expected, and sequentially a bit higher than our last look. 123.8 would be the highest level going back to the November read of last year. And finally, what are we looking at ahead? Expectations, 72.2. We are looking for a number around 69. 72.2 will be the best read since February of 72.6. We do see Richmond Fed manufacturing. Everybody continues to, of course, monitor to see if onshoring and some of the issues of manufacturing are picking up a bit. This particular read is better than expected for April. We're looking at 3 versus an expectation of 1. That's the high water mark of the year. As a matter of fact, you have to go all the way back to February of 25 to find a positive number of 3. To find a higher number, you're back to April of 2022. And on the business side, this, of course, the service side, a bit of a different picture. -6. -6 would equal where -10 was February. There's your comp. What are interest rates doing? They're going up. And they're not only going up domestically, they're going up around the globe. Much of that, of course, is nervousness regarding the energy sector. Current high yield of 437 and 10s does represent some resistance. Should we trade above there, that would be technically significant. Sarah, back to you.
Okay, so consumer confidence is a beat. You do have some expectations that were increased, unfortunately, which is why SPY is getting a little bit of a red candle right there. So the Conference Board of the U.S. says 12-month inflation expectations ticked downward, but continue to be elevated. The percentage of consumers saying interest rates over the next 12 months will be higher on net rose to nearly 50%. Now, we did, I think, a really insightful episode yesterday on basis points. I will link it right here, and we'll watch a little bit of it in a bit, where we had a hedge fund manager. He manages $4 billion. He's the person I've been saying has a S&P 500 target of 8,600. He criticized this exact logic for how the Fed ultimately thinks of data. So notice this sentence right here. The percentage of consumers saying interest rates over the next 12 months will be higher on net rose to nearly 50%. The funny thing about this is the Fed is surveying random people that might be Democrats, might be Republicans. And ironically, if they're Democrats, they think rates will go up and inflation will go up. If they're Republicans, they think rates will go down, inflation will go down. And they're using that as their basis to decide if they should cut rates or not. It's the expectation of how people think of interest rates going up or down, or think of inflation going up and down, which is, I mean, just logically the most idiotic way in a developed society. Like I would imagine, 250 years democracy, the US is a little bit more developed than not, for us to be using that as the basis for how we think of inflation. If consumers think the price will go up or down, not if the actual prices are going up or down, but and consumers, which are incredibly politically motivated because we're human beings at the end of the day. And if you love, Trump, you might say, yeah, inflation is going to come down because Trump tells you Jerome Powell's too late. And if you hate Trump, you might say, well, inflation's going up because the tariffs are horrible. Like, it's such an idiotic way for the Fed to be using consumer interest or consumer confidence as the basis for the rate cut trajectory, which is what I think Kevin Warsh is going to change. Whether you love him or not, Kevin Warsh doesn't want to be backwards driven. He wants to be forecast driven. And as a result of that, maybe Kevin Warsh makes some fundamental reforms in the Fed that is going to use more data, like actually be data driven versus some of this other stuff. So, these headlines, it'll take the S&P down a little bit, which is what we're seeing right here on consumer confidence. But realistically, I mean, it should have no impact because it's not real. Like, it's not a real way to think about inflation, in my opinion. NVIDIA going for it, 213, trying to go higher. Is Tesla also 380? Tesla is also 381. There you go. Isn't that how prediction markets work? Yeah, but prediction markets are a bet between two people, right? That shouldn't be determining the policy of the United States when it comes to interest rates or inflation. If you think the Knicks are going to win or if you think the Knicks are not going to win, you can have a bet on that. But to determine that inflation, which is instead of looking at rents and oil and all these things that really matter, you're looking at, owner's equivalent rent is the Fed literally calling people every 6 months and asking, what do you pay for rent? Every 6 months, things change, right? And so it's always backwards. Like the methodology has never made sense. And I think that's also why Jay Powell got it wrong in 2021. Now, he's done a good job since then, in my opinion. I know a lot of people don't think he's done the best job, but I think he's managed the transitory inflation at least somewhat decent over the past couple of years. But, those mistakes can't happen. And when they do happen, it ends up being really, really bad. Microsoft right there, 426. That continues to go green. Nebius, are we still below 140? We are still below 140. Google just flipped green, which is nice to see. The Googs is green, hit 353 yesterday, 350 again, and then NVIDIA back to 213. Why is Iran dumping? Because Daniel is not giving us a deal. I mean, at the end of the day, look, I'm not the biggest Iran bull in the world, but where the hell is the deal, bro? Where is it? Like, we need a deal. If we don't get a deal, I mean, the stock's going lower. So I hope on earnings next week they announce a deal. But if they don't, I think people's patience is going to run pretty thin on Iran. I mean, how do they have all this capacity and they can't announce a deal? Like, can someone logically explain why is it, what is taking so long? Like, if there's all this compute constraints and all this demand, why haven't they announced a deal in 9 months? Like, what is happening? So I feel like that's kind of the bigger reason. But obviously all the neoclouds are getting hit. That's why they're going down. If the neoclouds were up, Iran would probably be up, but that's why that's taking a hit. ServiceNow, 92. ServiceNow, 92. As that is also red. You should check his latest tweet. Well, his latest tweet got him in a lot of trouble in the comments because his tweet is like, we are so compute constrained, demand is crazy. And then everyone's like, okay, if demand is crazy, where's the deal? Maybe he tweeted that as a precursor to him announcing a deal soon. But I mean, his tweet was not bullish because he's not announcing a deal. 381 on Tesla, back above 380. As that is green. Oil, are we still below 100? Let's see. By the way, this new iPhone, I'm not going to lie, it has been so fast. Like, I'm convinced Apple somehow targets your previous phone and makes it slower on purpose because, and I only had a year-old phone. It's not like it was like a 3-year-old model. But this iPhone 17 is just like fast. Crude still at 100, just above 100, up 3.8%. Like, I'm like I can switch through apps quicker. I can text faster. I'm like, my goodness. It's like substantially faster. And I feel like at this point every year, if you really want a fast phone, you just have to upgrade at that point. CoreWeave, 109, only down 2%. Only down 2%. I'm still on an iPhone 13. Spotify so laggy on it. Yeah, the last phone I had for 3 years, I think, was the 12. I had the 12 for like 3 years before I got the 15. And 2 years, then I had the 16. And now I'm just like, you know what? I need something fast every day. Apple, that is also still up. Again, Galaxy had good earnings, but all the yield clouds down today because of that OpenAI headline. So unfortunately, it's not getting that much respect. It is up about 2% right there. I still have the 12, still on the 13. Look, I don't blame people for having the old model. Chris had the freaking iPhone 10 until last year. He was running on a decade-old model. I was like, all right, man, I get 3 years, 4 years, 5 years, 10 years. It's like, goodness, dude. But yeah, if you just want something fast, I feel like you have to upgrade. Disney, 101. Okay, you do not have the 4S, Astrocus. I refuse to believe you have the iPhone 4S. I don't believe that. ARM back above 200. Back above 200. Jake, thank you for the super chat. What's up, Emil Lurker here for about 6 months. Been watching you religiously. Any thoughts on starting a Reddit position? Jake, thank you for being here, and thank you for watching, even if you were not in the chat. It means a lot. Reddit, I like. I think the valuation here is materially cheap given the growth they can put up. But once again, is it safer than Meta? I don't think so. Is it a high beta growth name that if they have any mess up on earnings, it will go down? 100%. So to me, you buy Reddit here if you believe the valuation is reasonable, which given the growth they're putting up, it's not like the valuation is dirt cheap. At 120, 130, you could probably argue that, but that was in the absolute March lows where everything was dirt cheap. Is it reasonable? Yes, if they compound at 70%. It is chilled in the 250 to 280 range for a significant amount of time last year, so it's not like it's unheard of for it to get back above 200. I think a run to 175 on earnings is not crazy, but they just can't mess up. You know, we're just in a cycle where these earnings have to be unbelievable for the street to give them a premium, especially given, you know, Meta trades at a cheaper valuation and Meta is more safe than a name like Reddit. So I don't hate it. I also think earnings are going to have to be really important. Oracle 168.44. That one trying to get back to 170. Yeah, exactly. 0.62 peg ratio on Reddit. Like the growth is there, right? The growth is really there. The quality of growth is one thing to question to an extent, because again, you know, what's Reddit's moat, front page of the internet? How many people really are going to use it? Is there an AI angle to this thing? I think all of those are important questions, but at its core, if they just continue to compound at the level they're compound, there's not many companies growing at 7. I mean, AppLovin, Palantir, and Reddit are the only ones really growing 70%. So, you know, Meta at 33% is incredible for their size. But if Reddit is able to, and imagine Reddit does 80%, something, you know, if they really beat, that stock's going up. But it depends on how, you know, confident you are on that. NVIDIA, are we trying to go for 214? We are trying 213.30. She's trying to get there. What do you think about Hood today? I don't know. The numbers, look, unless I've done the calculations fundamentally wrong, the numbers aren't going to be amazing. So if the numbers are not amazing, then it's a question of sentiment. And given Bitcoin is down, that's bad sentiment. Now, S&P is at all-time highs. That should be good sentiment. But the question is that really resulting in trading volume? And so being objectively honest based on the numbers, I don't know if Hood's going to have that blowout quarter. Now, last year it was a different question. Last year it was very obvious Hood was going to beat by 30, 40%. And the people that didn't believe it ended up seeing that as a surprise. This year, I think if people think it's going to beat by 34%, they're going to be surprised to the downside because they're just not going to beat by that type of a margin anymore. So I'm not expecting a massive, massive print here. But we're going to see after the bell what Hood does. Salesforce 183.50. Yeah, so I'll be live with Tanner. Tanner, Roy, and I, 3:45 will be live. I'll be live tomorrow for SoFi. And so we'll cover all of it. So do you think it could dump? I don't know. I mean, my gut tells me if the numbers aren't the best, there's a more probabilistic chance that it dumps. But then again, the numbers haven't been good for the past 3 months, and the stock has pumped from 60 to 90. So, you know, now it's taken. I actually like that it's down going into earnings. It would not be good if it was at 90. Expectations would be too high. I kind of think there's a world in which this thing just stays flat, 82 to 85, maybe dumps down to 78 to 85. Would not be that crazy to see it in that range. That doesn't get a dump all the way down to 60. I don't think so. I think that would be too aggressive. But I also think a pump above 100 might be a little aggressive as well. Obviously, I would love if it goes back to 100, but trying to look at it in the context of the numbers. Tesla right there, 380. Tesla right there, 380. JetBlue CEO said we are suspending full year guidance, reflecting external factors alone, not company specific issues. It will keep watching demand and supply and expects to cut additional capacity over the summer. JetBlue, that stock is up 0.4. Nothing too crazy from there. Amazon, is that green? That's trying to go green. 260.8. What do we have tomorrow? So again, we have SoFi in the morning, along with, when is PayPal? Usually PayPal's on the same day as SoFi. I guess that's next week. But we have SoFi, Lemonade, GE, Wingstop, Fiverr, and then Etsy in the morning. In the afternoon, we have Amazon, Meta, Microsoft, Google, Qualcomm, Chipotle, Carvana, Ford, eBay, Cheesecake Factory, Sprouts Farmers, and MGM and KLAC. And then we have JPOW in the middle. So that's the print that we have up for tomorrow. Obviously, it's going to be a massive, massive, massive day. NVIDIA not being able to break through 213, getting rejected right there, 212.95. I ran down 8.3 as that is now getting hit. I wish we had PayPal tomorrow. As usually the fintechs happen together, and we would see that. And then it would go from there. Paul, thanks for the super chat. I missed your first one. Let me pull that up right here. Snowflake price charts for options after May 15th jumped to 400. They cap at 210 prior. Why would this be? Bought a 310 call May 15th yesterday, up 415% today. Something is weird with that setup. You know, the interesting thing about Snowflake right here is that they were hurt the most over the past couple of days in the context of IGV. Like, it was kind of unprecedented. I mean, they were hurt worse than Adobe and Salesforce. So maybe the options volatility is actually pricing in a very big beat given how much they've been sold off. And that could be part of the reason why you're seeing the strikes dissipate on different levels. Fundamentally, I don't love Snowflake. Again, these guys are still not profitable. so it's like they're growing, but they're not even growing as fast. I mean, they're growing 30%, 29%, which is good growth. It's not like unbelievable growth, and they're not profitable. But if the street doesn't really care about their profitability, then, you know, this thing was 220 a couple months ago. Wouldn't be crazy to see it pump back up to 180, 190. Did get to 118 on April 13th. And you're starting to see that potentially help itself as it's rebounding. ServiceNow, 92. That's a problem with space as well. Yeah, that's, I mean, a lot. Rocket Lab, they're just not profitable. You know, you're buying these names on more hype than fundamentals. Qualitative fundamentals are there. Quantitative fundamentals are not. Like, it's just not for a lot of those names. But that might not matter if we have the SpaceX IPO. By the way, SpaceX IPO, I want to show you guys a clip of someone talking about it today. It really is nasty what they're doing with this thing in terms of how they're pumping it into the markets. You know, they're pressuring it into being part of all the indices, and I think Elon knows that, which is why you're getting so much excitement on the name. But there are, in terms of how it's playing out. So let me just play this clip right here. This is from Patrick Boyle. Some of you guys might know him. He was on the Prof G Pod. Here was his explanation of the biggest scandal in history when it comes to SpaceX.
Almost instantly. I think there's going to be a 15-day delay. And also the weighting that it'll be given is much higher than you would expect for a company with a very low float. So in a funny way, the company goes public at a very high valuation. People will probably buy in. Firstly, there's a lot of people are just very excited about Elon Musk and his companies. They'll put money in, but then the expectation is that the indexes will be buying 15 days later. You know, at the current valuation they're talking about, it would have a 4.5% weight in the NASDAQ 100. There's also been talk about possibly S&P pushing for early inclusion as well. And that would essentially mean that there's just a frenzy of it being bought up, stuffed into the portfolios of people who index, who are not really valuation sensitive. And the valuation they're talking about, to be clear, they're talking about 125 times sales. So that's not earnings, that's sales. And we don't even really know what the earnings are of SpaceX. There was, Reuters published that they had EBITDA of $8 billion, but EBITDA is not earnings. It's earnings before essentially the cost of building satellites and building rockets, which for SpaceX you have to imagine is a significant cost. There's a famous quote from, I think, around 2002, where Scott McNealy, who was the CEO of Sun Microsystems, spoke about, the price that people had invested in Sun Microsystems at. And he said, well, what were they thinking? They invested at 10 times sales. And he said, if you put your money in at 10 times sales, in order for me to return it to you in 10 years' time, I have to pay all of the sales out as dividends. And that assumes that I'm not paying any staff, that I have no R&D costs, that there's no manufacturing costs. He said there was no way people were going to get a return on investment at 10 times sales. Now we're talking about 125 times sales. And, it's worth noting as well that SpaceX is an exciting company. It is growing, but it's not analysts expect it to grow 25% next year. That's not good enough. Like Google went public, I forget how long ago, but they were growing at 240% a year, and they went public at 10 times sales once again. And so the question is,
I mean, look, when you break down the numbers, it gets hard to be super excited about the valuation. Now, if this guy's not a big fan of Musk, that's fine. I don't think he said anything that was political there. So I don't think if you love Elon and someone says, hey, look at the numbers, you can point to, oh, well, that guy just hates Elon. It's like, well, in anything that you heard, did he say anything that was objectively implying how much he hates Elon Musk? No. Like, he just flat out put out the numbers. So I don't care if the guy loves Elon or hates Elon. I'm looking at the numbers, and the numbers are staggering in terms of not only the multiple that it's IPOing at. Forget a stock that eventually gets to a high multiple, because that happens, but it's IPOing at that multiple. And then on top of that, the indices are colluding with it. I mean, it's the NASDAQ and the S&P. They want a lot of fees, and they know SpaceX is a hot commodity. And so, I mean, we've never seen, it's unprecedented that within 15 days of going public, you get included into the NASDAQ and into the S&P 500. And again, if you aren't a stock market junkie, like all of us that are here every day, and you just, your retirement account, your 401k, every couple of weeks, it invests in an index fund, you're just going to automatically be buying SpaceX, and you're probably not going to care, because you probably don't even open up your 401k every other minute like we do to check. And so it's not going to matter. And so, it's artificial liquidity that's being created. And, if SpaceX is eventually $10 trillion, then it won't really matter. But in the short term, the question is just going to be how much shareholder return is there? And there absolutely will be shareholder return. It's just that return is obviously going to be going to the VCs that were early in SpaceX. I don't know if it's going to be going to the people buying at $2 trillion. Now, having said that, if it does get into the NASDAQ and the S&P that quick, maybe this thing pumps to $3 trillion. Maybe it becomes that euphoric. But I don't know if that's the best thing for the stock market, for an IPO to go that crazy. And so I guess we'll find out in June when that happens. I do wonder, though, if that brings up Rock Lab, ASTS, if SpaceX goes to $3 trillion, I would imagine Rock Lab's closer to $100. Same thing with ASTS, right? Lunar, Planet Labs, Sci-Do Space, all of those potentially would catch the bid. So the question is just if SpaceX gets that big. AMD right there, 324, still down 3%, but nice recovery from 309. And then CoreWeave down 2.7% as well. When is Nebius's earnings? I don't know. Can someone tell me when Nebius's earnings is? Actually, I believe it's in a week or two. Which stream was the one you did with ASTS? It was 2 weeks ago on the Tuesday market close. I think we put in the title ASTS. It's in there. Yeah, if you just search ASTS on my channel, then it should definitely pop up. Ward, thanks for the super chat. Do you have any video explaining call options? Yes, I will link it right here. It's called Options 101. It's a 3-hour video. Should cover all the basics. And hopefully this helps. Also, again, I say this every time, but ChatGPT, asking the language model about, just asking it questions about, hey, treat me like I'm a 5-year-old and tell me about what an option is. Like it really, you just go back and forth and it becomes a personal tutor. Like, I don't know. I think kids, as they grow up, are not going to have to pay for a math tutor or chemistry tutor anymore. Like why do you need a private tutor if ChatGPT is literally for free? It's going to help you step by step, explain every detail to you, help quiz you, test you, all that. You can do the same thing with options, right? So I think the models are a very easy way after you watch that video to interact with it back and forth. ServiceNow 92. Continuing to catch a bid here. What if you aren't smarter than a fifth grader? That is a good question. That is a good question. I wouldn't know about that, though. I wouldn't know about that. Duolingo is up to, I mean, you basically explained the Duolingo crash. Yeah, pretty much. I mean, now again, I do think Duolingo has a bit more of a data moat, but once again, if you want to learn a language and ChatGPT does it for you, you might just not have to use Duolingo. So obviously the narrative there has been down. You still need the tutor for accountability to ensure they sit there and do it. Yeah, I guess. I mean, you know, if you're not reliable enough, like Rocket Lab losing 80, like if you're a kid that like is not able to sit in front of a computer and teach yourself, you know, technically you're not teaching yourself, right? Because the model's teaching you, and you like need someone to like babysit you, then yeah. But if you can be reasonable enough to say, I'm going to sit down for a couple hours and learn this, then, I mean, like for all the people that pay to learn about like options, there's all these courses and stuff. It's like, why? Like ChatGPT will know more than any human on the planet that says they can teach you about the stock market or options or this or that, because it's trained on all that data already. So it's like, if you want a human-to-human interaction, that's different. And sometimes people do, but if you just want to learn the basics of it, I mean, this is stuff where you do not have to pay money anymore to figure this stuff out. UNH getting a bid as well, 2%. 2% as that goes green. Every time he yaps, he pauses and mentions a stock movement as well. That's pretty much how we do the show every day. We're yapping and then we see something move up. It's like, oh, ServiceNow 92. ServiceNow 92. Is your sister a teacher? She was. But even my sister, she's now an administrator. But even my teacher, dude, my sister has started to recognize that like teachers aren't as relevant as they were in the past. I mean, a lot of her teachers that she manages, they are using AI to help students learn. And if you're not, it's ridiculous, because the thing is the most powerful tool on the planet. So, I mean, even she's recognized that teachers are important, but like the AI that's helping them is very important and potentially one day might supersede the teachers themselves. Amcor right there is still down 5 as that continues to go down. Mid, are you going to short Tesla? No. Why would you short Tesla here? It's already down from 498, down from 420 from a couple of weeks ago. Unless you think the market's collapsing. They already had earnings. Earnings weren't good. The market priced it in, went from 400 to 370. There's no reason to short it here. I feel like there's easier shorts in the market than betting against Tesla. I highly doubt teachers are going to be replaced. Yeah, I don't think teachers are going to get replaced, because at the end of the day, you know, kids will always go to school. I just think if you're a self-learner and you are thinking of paying like $1,000 to someone to help you with your chemistry, I mean, like, you might not need to do that. The models just might be a lot easier at navigating that. Let's take a listen to this around some new data for a Gallup survey on how Americans are thinking of their overall financial situation.
25 years, 55%, that's the high there, of respondents. They surveyed more than 1,000 Americans basically around April, said that their financial situation is getting worse. Highest since 2001, and topping levels during the pandemic and during the 2008 financial crisis. That's kind of the mood gauge, and it's a problem, you know, certainly for the administration, Republicans around the midterm elections. But you know what I always say? Watch what they do, not what they say. Yes, because what they say is that they're miserable. What they're doing is not so bad. I mean, like, we're getting the earnings. I'll just highlight a few from different different parts of the economy around the consumer. Kimberly Clark, CFO, okay? We aren't really seeing any large-scale shifts in consumer buying behavior. GM, CFO, we haven't seen any material changes to demand or mix thus far. Hilton CEO, the results demonstrate a continuation of strengthening demand trends we've seen since late 2025. Also pretty bullish, and he went on to highlight the U.S. in particular. JetBlue, demand trends strengthened as the quarter progressed. One weak spot was Sherwin-Williams, where they said a quarter was characterized by heightened global uncertainty and continued demand softness in most end markets. But I think that has a lot to do with the housing market, where people, aren't spending as much on their homes because the housing market has been soft. But overall, Carl, it does paint a picture of strong and resilient demand. Similar comments from Coke later, which I'll share some of the new comments from the CEO I got on that mover.
I mean, we keep coming back to this theme of nice beats for the quarter, conservative guides for the year, right?
Yes.
You could throw Coke in there, arguably UPS, DR Horton, GE over the past week or two. There's been a lot of that.
Right. I think some analysts would say, okay, the numbers are so good. Why aren't you raising your forecasts and your guidance for the year? And the companies are mostly saying it's more prudent to be sort of cautious and stick with our forecast.
And that's a fair point, especially with the price of oil still elevated. I mean, it indirectly affects a Coca-Cola, even if it more directly affects a United Airlines. So the lack of guidance raises, and again, some of these companies have been raising guidance like crazy, like Celestica, which unfortunately didn't get the benefit today. But a UPS or a Coca-Cola not doing it is more reasonable so that the expectations don't get too high. Reddit right there, losing 150, unfortunately, 148, as that is down. NVIDIA, at least it's at 212. It was at 208 in the morning, but now it is 212. Amid, I teach at a university and there are professors who don't even take attendance and talk in front of thousands of kids. Yeah, I mean, I remember when I was in college and, if there's like 3,000 kids in a seminar, a lot of times the professors are there for a job. Some of them really care about teaching, but a lot of times they're there because they're getting paid. So if you don't show up, they're still getting paid regardless. And so they're not going to care that much. Again, I think in high school and when you're younger, like personalized tutoring and teachers matters way more. When you're in college, at that point, you've got to be a bit more of a, self-learner because, no one's going to hold your hand in college or just in general as you grow up in life, right? You need to have some more level of ambition to learn stuff on your own. And I just think the models are the best way to do it because they're free. Like I've used these models to learn so many things. It surprises me how people don't ask the models to teach them more and more stuff about topics they're interested in. And just go down the rabbit hole of learning more. SanDisk down 5.5%. As that one continues to go down. In university, you're already expected to have learned how to learn. Yeah, and look, most kids, including myself, when I started off college, I was a horrible learner. I'd really not learned exactly how to learn, but you go through life experiences and you try to get back. Wow, Poet gave away the entire pump, dude. Thing was up 15%. Now 884 to 807. Anyone who bought in the 870s, 880s on momentum, unfortunately, if this thing flips red, then you're going right back down to the sevens today. Hims can't make a move, 28. 28. Yeah, like put in the chat if you've used AI to teach you something. I use it every day to teach me about the economy and geopolitics. Like when silver was crashing, I was like, ChatGPT, I don't know anything about commodities. I'm an idiot when it comes to understanding the dynamic between silver and interest rates. Like, just explain it to me. And just hours and hours of me reading to try to have a better comprehensive understanding of like why things are the way they are. Which is, I really think, the moat of the models. They take your attention away from stuff that theoretically could be brain rot and they put you into an interactive experience. Now, the downside of that is if it becomes too interactive, you lose your social skills, all that stuff, right? So there are negative connotations of it. But the reason it's so addicting to keep using it is because you feel good after you learn about silver or the geopolitical history between Iran and Iraq, right? You just feel like a smarter person, which makes you feel good. Rock Lab below 80. Every day. All day, every day, absolutely. Yeah, we are living in a time where, you know, when I guess in the internet era, 1970s, 1980s, 1990s, when it was really popping up, people probably were like, oh my goodness, I can be connected to information across the world. Our revolution is we're not just connected to information, we have the intelligence for that information to become an asset in our lives in a way that, it's not just like you get to go to ESPN.com in the 90s and get to see the sports scores. You now get to learn so much more about sports if that's what you care about, which potentially makes you more productive, impacts your life, allows you to do different things. And that is a fundamentally different type of revolution. That is what Jensen has called the intelligence revolution, right? The token revolution, which is not going to slow down like anytime soon. Yeah, I didn't even mention vibe coding, which is, the people that don't even know how to code like myself can make websites in a day, which are crazy. Iranian parliament national security spokesperson, the deputy foreign minister, reported no nuclear negotiation instructions during the recent foreign minister trips. Dude, I wonder if Trump's going to even get any concessions when it comes to nuclear weapons now. I really wonder, because this has gone on long enough. I wonder if he even cares that much anymore. If he just wants the Strait of Hormuz to get open and get back to the economy. Like, I imagine he does, because he's going to look bad if he doesn't get any concession. But maybe they settle on 10 years, not 20, not 5, and that's it. Some type of enrichment ban, like something where he can paint the story that, yes, we got what we wanted out of this whole situation. People weren't even really using the internet until the late 90s as much. Yeah, dude, I remember when we got our first computer at home, and like my mom showed me what the email looks like, and I was like, email, like I remember setting up my first AOL account. Like, it was so important at the time, and we are just so far beyond, where we were back then. You got a lot of calls coming in from Micron. Someone put $3 million behind a $600 strike. Wow, May 15th. That's 2 weeks from now. Micron 600. I feel like Micron is going to demolish earnings. Micron down 5% right here, losing 500. I just wonder if the street's going to give it some love. Yeah, surfing the World Wide Web is what we called it. Books are great too. Does anyone, put in the chat if you like actively read books. I'm just going to be honest. I don't. I don't have the patience to sit there. And the last book I read was Carp, not the Technological Republic, but the book after that, on Carp, Philosopher in the Valley. Because I had to interview the author. So I was like, okay, I can't sound like an absolute idiot. Like, I need to read this damn book and if anyone saw the interview, I thought it was a good interview, but it was a good interview because I was able to ask him questions because I read the freaking book. If I didn't read the book, it would have, probably not looked the best. But outside of that, no. One book a week? You guys read one book a week? Oh my gosh, dude. Audiobooks do not count, okay? Tanner says audiobooks in the sauna. That I'm sorry, I'm not counting that as reading. That's a podcast that's just like 8 hours long. So we are not counting audio, but if you like, that's a cop-out. I'm talking about sitting down, licking your fingers, flipping the pages, and having full peace and reading, which quite frankly is a fundamentally different experience, even from a intellectual perspective than an auditory experience. Like there's so many studies on why reading is so good and so helpful for you. That's why, kids are encouraged to read when they're younger. Now, I just don't think I have the attention span for it anymore, but still, that's like actual reading, not Cliff Notes. I listen to you, I don't read. But me too, right? I listen to content throughout the day that I try to think is informational and, important. I mean, there's the only like fun content is like Instagram Reels that I consume. My content diet on Instagram Reels is like dog videos, if I'm being honest. And then throughout the day, it's politics, it's news, it's tech, it's business, it's stuff that I'm trying to have a better grasp on. Wow, SanDisk lost 1,000, down 7%. That one getting hit today, along with Micron. And again, I don't think audiobooks are bad. Don't get me wrong. I'm just saying, I'm curious how many people actually, let's do a poll on this. How many people actually, open the physical book and read that shit? Because my thesis is not a lot of people, dude. I think it's a lost. even though it is an art. Do you read books? If you read one book a year, do not click yes. Like, let's make the standard at least 2 books a year. Like, at least 2 new books a year is the standard. Which I don't. I'm not at 2 books a year. Poet loses 8. Lost the entire pump. 45 million shares of volume. Losing the entire pump. You know, I had a call yesterday, or not yesterday, it was like a couple weeks ago, with someone who works at a book publishing company. And they were trying to pitch me on like writing a book. And in my head, I'm like, bro, I don't even read books. What would I write about? You know? I also, the idea of sitting there and typing like 100 pages, I'm like, oh my gosh, bro. I feel like that would be crazy. And I don't want to do some AI book or like I talk and then someone else writes the book. I feel like that's not a real book. Like, that's just ghostwriting. It's not really you writing a book. Amcor down 8%. But it would be cool. Like, I don't know. There's certain topics I would love to have a form factor of a physical book on. Like I don't know, if Robinhood becomes a $500 billion company one day, writing the story about Robinhood, I feel like I would be in a really good position to write that book, just given the history I have with the company. But that also is going to take time, you know, for the Robinhood story to play out. And that's something I would really want to write about. But I don't want to just write a book for the hell of writing the book if there's not a real story to talk about. And also, you know, I don't want to use some AI garbage to write the book. Car is up 5%. That is also slightly green. Jamie Dimon says credit decline will be more severe than expected. Dimon says, I don't worry about the U.S. economy. Dimon need to make sure we keep the Western world together. Okay, Dimon did say private credit wasn't that big of a deal 2 weeks ago. Looks like he's potentially flipping a little bit in terms of his thoughts on credit. 362 on UNH. That is still green. Diamond says, worst case I worry about is deflation. Wow. Interesting. Where is he talking? Is he at some conference? He's not live on any of the business channels. Trump's about to be live, by the way, with the King Charles, I think he's about to be live with again. He was already live with them yesterday, but I think he's about to be live again. Dude, if deflation is his concern, then Kevin Warsh, if he's on the same mindset with Dimon, is going to get us those freaking cuts. NVIDIA losing 212. He's at the Norges Bank Investment Conference. Okay, cool. Is that happening in Norway right now? Is that actually happening there? Norges Bank Investment Conference. Or is that in New York? So that's where he's talking. Jamie Dimon is the headline speaker. Yeah. Ken Griffin's going to be there. Dave Rubenstein's going to be there. By the way, Ken Griffin was pissed off that Mamdani used his house in a video to tax the rich, and Citadel's now thinking of canceling 6,000 jobs they were going to make in New York. I don't think they're actually going to do it. I don't think they're actually going to take those jobs away, but if they do, I mean, definitely would be a pushback against Mamdani's marketing. But we're going to see if that ends up happening. ServiceNow, 91.73. Navitas dumping hard. That is correct. 17% down. Poet as well taking a hit. Memory also taking a hit. You know, there was another conference in Taiwan yesterday, and the guy at the conference said some super, super bullish stuff about memory. Oh, sorry. It was the SK Hynix group chairman, Che Tae-wan. And look at some of these quotes. I mean, these quotes make you think that a Wall Street Journal article about a bubble is like the dumbest thing ever. Building 1 gigawatt AI data center costs around $50 billion. And globally, we're building 10 to 20 a year. South Korea currently only has 1 gigawatt of total data center capacity, even including conventional data centers, and AI dedicated capacities is for less than 5% of that. 1 nuclear reactor is roughly equivalent to 1 gigawatt, but in reality, 1.2 to 1.3 gigawatts of spare capacity is needed. China is ahead of the United States in power generation capacity. NVIDIA remains highly dominant, but as the paradigm shifts from training to inference, we are entering an era where different hardware and software will be needed, aka CPUs. AI ultimately comes down to how much memory can be stored. High bandwidth memory, or HBM, is placed right next to the GPU to improve speed, cost, and efficiency. If we do not expand supply quickly, people will develop technologies that use less memory, so we need to increase supply as much as possible. The AI shock is likely to continue for at least 10 years, creating new jobs while also eliminating existing ones. If we economically integrate with Japan, we would have a combined GDP of 6 trillion, equivalent to about 2/3 of China's economy, making us a size worth taking seriously. So basically, you got the SK Hynix chairman saying we have not enough supply. 1 gigawatt already costs $50 billion. Memory is the biggest bottleneck when it comes to supply. And if we don't start ramping up supply soon, the types of hardware we're going to be coming out with will have less memory, which will make the AI products less reliable, which is why memory is the most important bottleneck. Obviously, he's biased because he's, because he's the chairman of a memory company, but still, that's his argument. And the expectations as well is $300 billion in operating profit for SK Hynix next year. I mean, that just Samsung's at like 500 billion. Like that, those numbers are insane for memory. Micron's, I think, at 175 billion. Nvidia's at 270 billion, by the way. So Micron's, almost 50% of what Nvidia's going to put up in just operating profit, which is, pretty incredible. And that's why I think DRAM has been getting so much of a bid. This is your memory ETF, down 4% of the day, but this thing already has $1 billion in AUM, as it's been getting a lot more excitement as well. We are dumping, though. We are getting a dump across the board. Lows of the day on the SPY. Rocket Lab lows of the day. Fastly down 1.4 pounds here, down 1. How come HIMS is dropping? I don't think there's a headline here, but more of your high beta names like a HIMS and a Reddit are getting a hit. Reddit 148. Nebius, worst of the day. Pre-market was at this level, recovered. Now it's right back, 134.38. I know a lot of people were stuck in covered calls on Nebius. Looks like those might not be as big of an issue anymore. Rivian down 4. ASTS, are we going to lose 70 on this thing? 73.80. As that is also down. Air Test Systems down 11. It was down 10 yesterday. AAOI down 6. It was down 12 yesterday. Ahmed, are we still in a crypto winter? So there's a good chart to answer that question, actually. Yes, because objectively crypto isn't going up, right? And it's been stuck for a while. But if you take a look at this, I thought this was actually really interesting. This chart is implying that crypto is closer to a bottom than not. So if you look at historical cycles, a 95 to 90% through crypto price over volume downturn on the peak to trough, we've already hit pretty much, this is implying, close to the worst that it's going to be. And if you believe in some of the other, timetable-driven analysis, October is when we're set to bottom on crypto officially. That would be 364 days from the top, which is usually how long the bottom lasts. And maybe we get to keep going from there. But as of now, yes, the bottom was 63K, and hopefully, that's the worst that we are going to see it. Ken Griffin is meeting with NY Governor Kathy Hochul on Thursday, following his threats to pull NYC plans for Citadel after Zoran used his penthouse to eat the rich promotional video. The two will be reportedly discussing the future direction of NYC. Ken said overnight that Mamdani's decision to single him out demonstrated a profound lack of judgment. He also noted what upset me was the personal attack. Kathy will now try to do some damage control. Okay. The New York governor trying to make up for what the New York mayor did. And I guess we'll see if there's any change there. Wow, Coherent getting hit. Yeah, I need to talk to the manager, basically. Wow, 9% on Coherent. Okay, now everything's going down. Lumentum, 9%. S&P almost 1. 1050, there it goes. Micron 6. We are going down, baby. We are going down. Intel down 4. Amcor down 8. SoFi down 2. Palantir down 1.4, actually not as bad for Palantir. UPS down 5, Corning down 9, Sienna down 8, Celestica down 15. Is NVIDIA at least holding 209? NVIDIA barely holding 209. It's going to lose it in a second. There you go. Just lost it. Nebius down 8. Down we go. VIX is up 4%. That is correct. Oil is, are we still above 100? Oil is 100.5. It's the highest of the day. Meta, are we getting hit? Meta's getting hit, loses 670. Google, still above 350. Again, I actually like this. I really, it's painful, but first of all, inevitable, right? Like we knew we were going to get a dump at some point. We were just super, super green for the past 2 weeks. But second of all, I don't want Meta to be 700 going into earnings. I want Meta to be 660 and just have a massive beat. So I kind of like that the big tech names are taking a beating here before earnings. Now, the smaller semiconductor names like a Coherent, Lumentum, those are just getting wrecked. And I guess they just got way too hot, way too quick. ARM down 9%. That recovered over 200. Now that's back down. Broadcom is down. What's the other big one here? AMD, are we in 320? We have lost 320, 316. That is down. Gold is down 3, silver is down 3. All right. Semis taking their beating. Semis are taking their beating. Apple's Tim Cook is seen at the White House for today's event. What event? Meeting King Charles? That's the event? Like, or is Tim Cook going to have a meeting with Donnie T here? I would imagine he's not there to see the king and queen. I think there's something different. But I don't think there's an event on Cactus. Is there an event on the schedule for Trump today that he's doing? Or is it literally just to see the king and queen? 208.90 on NVIDIA. SOX, which is your short float or your short semis, that is up 15% today. 15%. Financial Times, China poised to restart exporting jet fuel, diesel, and gasoline. Financial Times, Beijing wishes to supply mostly jet fuel to Asian countries that are now running dangerously low. Well, that's another reason why oil is pumping today. If China is getting back into this, everything's related to the king. Interesting. Okay. Yeah, Trump is. I mean, the channels are streaming it, but oh, here it is. I think it's officially live. Yeah, I think this is it. Okay, let's pull this up. I think this is it. I wonder if they're going to talk or say anything, or it's just like them taking photos together. We'll see, but yeah, there you go. Let's see if they actually do a press conference later or they actually talk to the media.
Before we get the national anthem, just want to let our viewers know that we're in for a lot of things here on the itinerary, Dana. You got a 21-gun cannon salute, and the President, the First Lady, their Majesties will proceed to the Blue Room, where they will get a pass-in review of 300 United States service members and nearly 500 members of the U.S. Armed Forces. That pass-in review is a historic first for state visits, so that's cool. They're going to have the guest book signing. You'll be in the receiving line. Then around 3 o'clock today, you've got a joint meeting in Congress where the king will be warmly received, I am told, by the Speaker of the House, and that will be something to watch throughout the day.
This is going to be the most boring shit all day. Is like literally, this is what Trump's doing all day. Yeah, we're not getting any quotes about the market or Iran today. 21 gun campaign. Great music while our portfolio collapses. Exactly. Yeah, that's going to be super boring. It's not something I think meaningfully. Trump's going to be doing this for like the next 4 hours. I guess this is stuff you have to do, right, to keep the relationships good between both nations. So, like, it's a formality, but it's not going to be that interesting, I think, for many of us. Okay, there you go. That's what's happening there. Nebia still down 7. Still down 7. Yeah, great spend of taxpayer money. It's a phenomenal spend. I know every president has done this. I do not care about this. I don't think a lot of people care, but I guess it'll get covered today. ServiceNow 91, Apple 270, Coke up 6%. That's getting the move today. Poet and Navitas just getting wrecked. Poet down 15, Navitas down 18 on the day. He's going to show him the ballroom floor bands. Oh my gosh. That ballroom, man. Looks like this ballroom is potentially going to be a bigger thing. Yeah, Rambus down 25, unfortunately. BMNR getting hit. ETH getting hit. And Bitcoin getting hit. Okay, there you go. Meta getting hit. 667, down 1.7. I mean, again, there's not a real headline outside of this OpenAI Wall Street Journal stuff, but if that goes away, or if the market stops caring about that, the oil stuff is probably a bigger reason for this. Next is up 4%. There you go. You got Next Decade getting some love today. It's been getting hit the past couple weeks. As that continues to rebound with oil. Did you see the UAE is leaving OPEC? Yes. Market doesn't like it. I don't know if it's necessarily bad, especially if they're going to be producing more oil, but that was a headline. Domino's up 2.8. Domino's again got hit 10% yesterday. But I guess some people are coming in and buying the dip right here. This is why you're not the president. That's definitely a reason why I'm not the president. I mean, just dude, objectively, there's nothing to cover there. Like this whole proposal meeting thing they're doing, ceremony, like that's not, I don't think it's going to affect anything in the market today. Unless you guys want to just stare at them, look at each other and pose for the cameras. In the context of markets, it's not doing much. Reddit down 7.9. 7.9 here. CNN, Iran expected to submit a revised peace proposal soon. Yeah, I don't think these headlines matter anymore, dude. Until we actually get something set in stone, none of this is legit. Mediators in Pakistan expect to receive a revised proposal from Iran in the next few days after U.S. President Donald Trump indicated that he would not accept an earlier version. Okay. I hope that happens soon, but until it does, these headlines are just becoming irrelevant at this point. Like we seriously need to just, it's almost like the tariff stuff last year, right? Back and forth. We have a deal. We don't have a deal. We have a deal. It's like at some point, I don't think the market's down because of that. I think the market's down because of this Wall Street Journal thing and then the general overbought nature of semis, but hopefully we get this deal soon. Yeah, agreed. It'll matter when the Strait is fully open. And that's what we got to wait for. The meals would be worth being president. I've always wondered, like, what does Trump get for dinner? Like, he can literally ask for anything he wants on the planet and they would make it. That has got to be a pretty cool perk of being the president. That's got to be a pretty freaking cool perk. Like, just whenever you want something food-wise, it's like always there. Nebby is still down 7. Reddit. Yeah, maybe he gets McDonald's more often than not. But like, if I wanted to eat a nice steak every night, I have a chef that's right there. Can make whatever I want. He only eats fast food. He definitely loves his fast food. McDonald's $2.93. That's up 1.24. That's what having a wife is like. Oh my gosh. Okay, that's what having a wife is like if she constantly cooks every meal for you. I don't think every wife does that. You know, some wives do, but I'm not sure if every wife. I mean, put in the chat if you're a wife and you cook every meal. I don't know how realistic it is anymore for that to happen, especially now when you have 2 people that are working. But that is wild. Mine does if she loves you. Yes, I do. My wife doesn't just cook, she feeds me. What if you don't like your wife's cooking? Well, that's a different problem. Tesla 375. OpenAI, they finally responded. Here we go. OpenAI to Bloomberg says its consumer and enterprise businesses are firing on all cylinders despite a report about missing internal targets. The company described the report as prime clickbait and said the mood internally is incredibly positive with growth in demand from business customers and its advertising business. OpenAI backers and partners saw shares sink on the news, with the company's CFO reportedly expressing concern over affording computing needs if sales don't grow fast enough. I don't know if that's enough to pump the markets, but OpenAI coming out and saying this is garbage, which quite frankly, I agree with them. I think the Elon court case is more relevant than this headline about compute and paying for it. Like, it's such a manufactured headline, dude. It just feels so obvious that they were going to try to do something to hurt the semiconductor rally, which I get. It pumped a lot. It needed a breather, but they needed a catalyst to give it a breather. You don't just get a breather without having a reason for it. And it looks like this ended up being the reason. OpenAI CFO on CNBC. Okay, let's go to that real quick. Let's see what she has to say. Bunch of you saying, I love to cook. Okay, there you go. I mean, if you love to cook, then I would imagine. Speaking in a second? Okay, I guess we're going to have to see what Trump says, but let's cover this OpenAI news real quick, and then we'll get to Trump. And I didn't know he was actually speaking to everybody.
Revenue growth. Then we need to go spend to get the compute to be able to serve it. So we, of course, think about our business that way around. We don't spend first. We really look at how the business is growing, and then we invest behind it.
The other detail that's catching a lot of attention in this report is a disconnect, seemingly, between Fryer, the CFO, and Sam Altman on an IPO timeline. I am hearing from sources close to OpenAI that the company is still on track to list as soon as the end of this year, and also has been meeting with bankers and lawyers to get the company ready to go public, guys.
I mean, that's something that she shot down kind of as well, and they've shot down publicly that there's any kind of, I don't know, rift between those two. She didn't comment on last week when we talked to her on IPO timing. I guess the question, Kate, is what needs to happen before that can happen. She did tout the fact that they were able to raise $122 billion, which is potentially more than any IPO can raise.
Clearly, there's demand, Sarah, in private markets. And as you guys spoke about, they're able to raise. The one thing that she has talked about is the ability to tap debt markets. I mean, going public and the different type of funding that they could get as a public company versus what they're able to leverage as a private company. So that's one motivation to get out there and go public. It's also market conditions. They are aiming, from what I'm hearing, to be IPO ready, but a lot can change, and sentiment around the market. And speaking of sentiment, and we're here in Oakland talking about OpenAI and the trial versus Elon Musk. There's a lot of headwinds for this company, whether it is public perception of AI in general, of Sam Altman as a leader and a CEO. They have got a lot to deal with on top of reports like this explaining a rift that they really, I mean, the statement says it all. They are pushing back hard on this, calling it ridiculous. I mean, that is a very strong statement from the company.
Kate, appreciate it as we keep our eye on the trial in Oakland with your help. That's our Kate.
Okay, Trump not live yet. The trial in Oakland between Elon and Altman is starting today, or at least jury selection is starting today. So that's why you've got all that media in that courtroom. The jury selection is going to be really interesting because you have a lot of people that don't like Elon because he went super Republican, right, over the past couple of years, campaign for Trump, all that stuff. But then you do have a lot of people that like love Elon a lot. And so I don't know how they're going to figure out this jury. I mean, you're going to have to find people that are supposedly super objective around both parties. You got a lot of people that hate Sam Altman for a variety of reasons. So I wonder how they're going to do this selection. And ultimately, you know, who ends up becoming a juror on this case, because that's going to determine pretty much everything. The VIX, by the way, up 2.5%. That is also green. NVIDIA still at 209. Trump is not speaking yet. Oh, he just started talking. All right, let's pull him up.
But stay nevertheless. Then you're going over to Congress and you're going to make a speech that's going to make everybody very envious of that beautiful accent of yours. Very elegant. He's a very elegant man. Here in the shadows of monuments to George Washington, Thomas Jefferson, honoring the British King might seem an ironic beginning to our celebration of 250 years of American independence. But in fact, no tribute could be more appropriate. Long before Americans had a nation or a constitution, we first had a culture, a character, and a creed. Before we ever proclaimed our independence, Americans carried within us the rarest of gifts, moral courage, and it came from a small but mighty kingdom from across the sea. For nearly 2 centuries before the revolution, this land was settled and forged by men, women who bore in their souls the blood and noble spirit of the British. Here on a wild.
Okay, so yeah, not going to be too relevant for all of us. It's going to be more so Trump talking about the history of the United States and Great Britain. But we'll see if we get any moments from that later that are more rooted around the markets. If he talks about Iran or anything like that. IONQ, that's down 1%. Rocket Lab down 4%. We got a headline right here as well. Polymarket sees CFTC approval to bring their main exchange to the US. That would be a big deal in the prediction markets because right now Polymarket is an offshore crypto platform. If they officially come to the United States legally, you definitely have more competition for Robinhood, Coinbase, and Kalshi if Polymarket ends up coming in. So looks like that might play out. And if it does, we'll see what happens for the prediction markets. Oracle still down 4%. Still down 4%. Amit, are you making any buys today? What is so on sale that's attractive to buy? I mean, are you telling me AMD from 350 to 319 is super attractive? Because I would disagree. NVIDIA from 218 to 209, not really attractive. Nebius from 160 to 130. I mean, look, maybe that's a better dip, but it's up from 130 to 180 or 80 to 130. Oracle down from 175 to 165 is not the most attractive dip either. I'm sorry, a lot of these names are just like, they've run so much. They've run so much. Navitas, no, I'm sorry, on a 17% pullback, I'm not buying that. Now, could it rebound tomorrow? Sure, but yeah, UVIX maybe. Like, again, I think Amcor is not attractive from 85 to 69 when it was at 42 2 weeks ago. So no, I don't. These are dips, but if you've already bought or you have positions, I don't think these are like, oh my gosh, I need to rush for the exits and buy this thing. Qualcomm, definitely not buying that. Like, that's a gamble going into earnings. Rocket Lab was at 88. It's at 80. Like, is that the biggest dip in the world? bought Rocket Lab at 57 a couple weeks ago, then at 62. That was more of a dip. Now, ServiceNow, I don't like this, but I think this is actually a legit dip because they already had earnings and it was good. But yeah, like as Zach says, nothing looks appealing at these levels. These are all dips, but these are not like, oh my goodness, these are the most appealing. Meta, yeah, MasterCard and Visa made their move. Now, Meta is more attractive because I think they're going to crush earnings. But this is also, a large cap. So, and this is up a lot as well. So you're going to have to, if you want to play it for earnings, maybe it's more attractive than not. But in general, Meta's up a lot from the lows. QXO, this one, I still need to do research on QXO. If I would be buying this right now, it would be not because of my due diligence. It would be because Steve really loves it. So I need to do my own due diligence here. But yes, this one, because of the acquisition, is more attractive. And Brad Jacobs does look a lot more legit than not. But yeah, that requires some research. What about AMD? No, I'm not buying AMD from 350 to 320. And again, maybe 320 is enough paying for it, but the risk to reward there is way more to risk versus reward. Just feels logically. Like what hasn't run is the question. CoreWeave is up from $60. Debius is up from $80. Oscar is up from $11. Palantir is up from 120. I think Palantir is going to crush earnings, but is it the best buy at 140 when it was just at 120? I don't know. Because if there's any metric that's off, that thing's going to take a hit. AppLovin was at 300. Now it's at 445. Down from 800, but is that the most attractive after it's run? I know a lot of people are saying SoFi here. I mean, at this point, Noto's got to prove that earnings matter for SoFi to really make a bigger move. And I don't know if Noto's going to do that. So until we see, time will tell. Again, we talked a lot about SoFi yesterday. Ultimately, they're going to have to get re-rated. But that's more of an earnings gamble as well on SoFi, right? Like, if you already have SoFi, are you doubling down at $18 before earnings? Or are you kind of just waiting and seeing if this thing can finally make a move? No, yeah, I mean, that's true. Noto's never missed an earnings, but rather, is the earnings good enough for the market to be excited about it? SoFi can't just miss tomorrow or beat tomorrow. SoFi has to reshape the narrative around their company tomorrow. And I don't know if they're going to do that because the only thing I think really does that theoretically is the fintech business growing. And I don't know if, the AWS of fintech is going to grow like an AWS of fintech should grow. I think the credit business will be fine. The loan business will be fine. But is that going to be enough? I don't know. I thought at the beginning of the year, it should have been enough. Obviously, there was better rate cut cycles. Then we had a war. Inflation spiked. Oil spiked. Now we might not get a rate cut for a while. That's like the big thing baked into SoFi's guidance. I think even without rate cuts, they're going to be fine. But this is what the street needs to figure out. Like, I think the pump tomorrow, if there is a pump on SoFi, is like 23, 24, which would be a massive move. Quite frankly, I mean, it dumped when it was at 27. So this would be a huge move if we get there. I think the dump is probably reserved to like, $16, $17, but I just have no idea. Same thing with Hood. It's not just being skeptical on SoFi. It's being skeptical on Hood to all these fintech names. Do they have the metrics and the narratives right now to really freaking pump? Amit loves Hood too much. That's literally last night. I criticized Hood's Cortex language model. I was telling Tanner on the phone the other day. I was like, dude, this thing is bad. Like, because Tanner doesn't have Hood because he's in Canada. I'm like, bro, it's not good. Like, I don't know how they ship this. Like, it's just not a good product yet. It's not about loving one stock or the other. It's all these names that people are mentioning here in the chat. None of these are AI infrastructure names. So when you talk about buying the dip on them, you have to also think, does the market care about them? Opendoor. Why would the market care about Opendoor? Mortgages are still above 6%. Housing market is not unfrozen. Opendoor is not profitable. The cult of Opendoor has basically died. I mean, who is pumping Opendoor every single day? It was like a 2-month phenomenon, and then it collapsed because the market realized, wait a second, this company doesn't make money like at all. They have no path to making money, at least not in the short term. So it's like just a lot of these names. They're not right now in the right thematic. Now, maybe that's the reason to buy, but also that could be the reason to, take some more time. LEU might be a good dip to buy. See this one? Yeah, this one I think is reasonable to even look at this name given its nuclear energy. And obviously it's taking a 7%. And again, look, if you like a lot of these types of names, which I'm a big fan of as well, Zeta, SoFi, Hood, that are not inside of the AI semiconductor theme, it is perfectly fine to buy the dip on them. But it's also important to understand they're not in a sector where they're being judged as companies independent of what's happening inside of the stock market. What's happening inside of the stock market is the market deeply cares about this AI narrative more than it cares about private credit, more than it cares about Southeast Asia's super app, more than it cares about Zeta's advertising moat. Like the market if the market cared that much about those companies, they would be up more. This is one of those moments where I think price action does matter because a lot of that, SoFi in particular, SoFi has absolutely demolished earnings for the past year and the market doesn't care. So there's got to be something more qualitative that's affecting it versus quantitative because you can't point to the numbers and be like, this is why SoFi deserves to be down. Unless you're just muddy waters and you think everything they're doing is fake, right? Even Tesla, which supposedly isn't the right narrative when it comes to physical AI, Tesla can't catch a bid because their numbers aren't good enough. So I just think that's kind of the story right now for the market. That story might change in a couple of weeks, but for the past 18 days, it's been semis. Why do people say most banks when SoFi grows way faster than most banks? Again, SoFi's growth, unfortunately, is tied to their banking platform, not their tech business. And I think that's what the street hates. And I don't think the street should hate it that much, but that's what they hate. They hate that the bank is growing like crazy and not the tech part of the business. Which, again, if you listen to Noto, his argument is $1 of growth is $1 of growth. It doesn't matter if it's banking or if it's fintech. But I think that's been the stain on SoFi for a while. I think the whole concern about their credit quality is absolutely ridiculous because we know their default rates. We know how conservative they are with loans. Like we know the quality of their members. So that part I think is just a stupid narrative. So I default back to the street doesn't think of them as a high-growing tech company. They think of them as a fast-growing bank. And a fast-growing bank is just, in the eyes of the street, not worthy of a multiple. Even if I disagree with that. Tomorrow morning, we'll get a better understanding of what this name ends up looking like. What about BM&R? Same problem with crypto. Either you buy the dip in the crypto winter and wake up 12 months from now and hope everything's okay, or you stay away from the opportunity cost of what the crypto winter is creating, which affects Hood, affects MicroStrategy, affects Webull, eToro, all those names that caught a bid off crypto last year. They're just not catching a bid easily this year. And that means you change directions. I like software here even better than a lot of the fintechs names because software is deeply undervalued. We know these names are deeply undervalued. It's just their growth rates also aren't really good. So again, fintech has a problem because their growth is either stagnating or it's being tainted by this private credit narrative. Software is being tainted by AI is going to destroy them type of narrative. The AI names have pumped like crazy. So if you're going to buy them, you got to be really selective because again, they have pumped like crazy. It is not fun buying something up 70% in a month and then dealing with a 30% drawdown. And so then what does that leave? Theoretically, it leaves big tech, but that's an earnings gamble because tomorrow you have all of them reporting. And on Thursday you have Apple. So if you're betting on Amazon, Google, Microsoft, or Meta buying them newly today for earnings, you are literally doing an earnings gamble. Now, if they drop 10%, who cares? Because, those companies will be fine. But if we're talking about risk to reward, well, then it matters how much you believe in the earnings. What about Poet? I would not I would not buy Poet here. But maybe some people will. 780 now on Poet. ServiceNow still getting a bit of a move right here. This pump is not even really a pump though. Barely up 1% today. Oh, where's XE? That was the IPO yesterday. Is that up? That's flat. Still at least being okay. Nokia down from 11, but at 1098, still up 2.4. Yeah, the Chinese stocks, how have those done? Baba down 1.6, JD Dude, JD was the stock people thought would be $40 easily in early January. The call options, there were 500,000 open calls for the $40 strike for January 16th. This thing never hit 40, got to 32.50, and then just came back down. So I think people got smoked on the Chinese stocks over the past year. October 2024 was when they bottomed and they started making a move up. And now it's more so people just, they're not excited about it. Navitas down 17, Bitcoin potentially about to lose 76 again. Tencent's not moving since 1 year. The NVIDIA restriction hitting them hard. Yeah, I mean, that's the other thing. The Chinese companies can't get the best technology. Now, when that export control opens up for NVIDIA, that should be a tailwind. But as of now, it's not there. Senate Majority Leader Thune on the Senate DHS funding says, we did it not once but twice. I came back and did it a second time, and the administration made it very clear that they wanted and expected that hopefully to be picked up and passed by the House. That was 27 days ago. I guess my question is, what was the alternative? That's what I said to them at the time. I mean, tell me, give me a better option, because I'm open to ideas, but I don't think anybody had one, and we had a bunch of agencies that weren't being funded. We have to fund all the agencies. They've got a bill over there that does that. Yeah, we still don't have the DHS funded, the Department of Homeland Security, in the States. We've had these like small bills to get us through the past couple of weeks, but we still kind of need a funding act soon. Trump is talking about renaming ICE to NICE as a, I guess, better form of branding ICE. I don't know if the Democrats will agree that that branding is enough to fund the DHS, but the whole concept is, if you're defending our country, then you are a NICE agent, not a ICE agent. We're going to see. We are going to see if that ends up happening. Rubio, by the way, was live yesterday as well, and he was talking about Iran. Let's pull up what he said yesterday.
It's great to see you here, not on a balcony with a vest on.
Absolutely. Great to see you. What do you see as the main roadblock to an agreement with the Iranian government?
Well, other than the fact that the country's run by radical Shia clerics, that's a pretty big impediment. The other is that they're deeply fractured internally. And I think that's always been the case, but I think it's far more pronounced now. The best way to understand Iran is you have a political class. Now, I think, people talk about moderates and hardliners. They're all hardliners in Iran. But there are hardliners who understand they have to run a country and an economy, and there are hardliners that are completely motivated by theology. The hardliners that are motivated by theology are not just the IRGC officials, but obviously the supreme leader and the council that surrounds him.
Do you believe that Iran's new supreme leader, Mojtaba Khamenei, is alive?
Well, we have indications that he is. Obviously, they claim that he is. We don't have evidence that he's not. But I think the unresolved questions here are, does he have the same credibility as his father did? We know that for many, many years, at least I know that for many years, there's been internal debates in Iran about succession and whether it should be, hereditary based. Should it be this? That there are a lot that are resistant to that. Does he have the clerical credentials to actually act as supreme leader? Is he actually making the decisions, or is there somebody standing in his stead who's basically controlling 90% of it and is the one actually making decisions on his behalf? We don't know the answers to these questions.
Reports do indicate Iran has offered to open the straits, but they want to delay conversations about their nuclear program. Would this be acceptable to the Trump administration?
Well, again, I'm not going to speculate about the president's decision-making on this matter. Suffice it to say that the nuclear question is the reason why we're in this in the first place. If Iran was just a radical country run by radical people, but, it'd still be a problem. But they are revolutionary. In essence, they seek to expand and export their revolution. Not just what they do in Iran. That's why they're with Hezbollah in Lebanon. That's why they've supported Hamas. That's why they've supported the militias in Iraq. They don't just seek to dominate Iran. They seek to dominate the region. And imagine that with a nuclear weapon. Look what they've done with the Straits. Great example. The Straits is basically the equivalent of an economic nuclear weapon that they're trying to use against the world. And they're bragging about it. They're putting up billboards in Tehran bragging about how they can hold 25% or 20% of the world's energy hostage. Imagine if those same people had access to a nuclear weapon. They would hold the whole region hostage.
Do you believe the Iranians are serious about making a deal?
I think the Iranians are serious about getting themselves out of the mess that they're in. All the problems Iran had, they had riots a few months ago, and these were economic riots. All the problems that Iran had before the start of this conflict are still in place, and most of them are worse. And now they have half the missiles, none of the factories, and no navy.
If there is no deal, what comes next?
Well, again, that's the president's decision to make. I would start out by reminding everybody that the level of sanctions on Iran are extraordinary. The pressure on Iran is extraordinary, and I think more can be brought to bear. But I hope that in the aftermath of this conflict, the whole world's eyes have been opened to the threat Iran poses.
I know that regime change is not a goal of the Trump administration, but do you see a scenario in which the actions of the United States and Israel lead to regime change?
Well, I think, look, regime change is something that has to happen from within. But changing the regime, I know it looks like a wordplay, is something that pressure can bring about. In essence, one thing is to change the people in charge or their ideology, but another thing is to modify or modulate their behavior. At the end of the day, even though they are radicals, there are still people in the Iranian system that every single day, behind every decision they make, they weigh the costs and they weigh the benefits. And we have to make sure that the costs of all the nefarious things they are doing outweigh the benefits of what they are doing. This is the reason why the blockade is in place. The blockade is not a blockade against shipping. It's a blockade against Iranian shipping because they cannot be the sole beneficiaries of an illegal, unlawful, and unjustified system of tolling and control in the Straits.
How do you walk the line between targeting infrastructure in Iran that hurts the regime but doesn't hurt the civilian population that you are trying to win over?
Well, the first thing is always intent. Our desire is not to hurt the people of Iran. We have no problem with the people of Iran. Frankly, we wish the voices of the people of Iran were heard as opposed to having 30 and 40,000 of them murdered in the streets. And so our targets will always be things that support the regime directly. Obviously, there might be a road or a power plant or a factory somewhere that also benefits the economy, but its primary role is to benefit the regime and its security apparatus.
I'd like to shift now to Lebanon. There are historic efforts underway to try and reach an agreement between Israel and their neighbor to the north. Where do things stand in those negotiations?
Well, it's a very unique ceasefire because Lebanon and Israel are not at war. Israel's problem is with Hezbollah. Unfortunately, Hezbollah happens to be inside of Lebanon and conducting attacks against Israel. So I think what I've perceived from this, and it's been very successful, is both the Lebanese and the Israelis seek peace.
Mr. Secretary, thank you for your time.
Thank you.
The Secretary also spoke about the...
What do people think? Is that the 2028 Republican frontrunner? I mean, I feel like the mainstream attitude has fundamentally shifted from Vance 2028 to Rubio 2028. Poet down another 2%. Definitely a strong communicator. Very tight in terms of his words and his ability to coherently communicate something. You can tell he's firm and adamant about the things he wants to say. The question is who the Democrats put up against them. And, you know, if this administration is giving Rubio so much leeway in this Iran situation to potentially set him up for being able to campaign on stopping Iran from getting a nuclear weapon and being one of the head negotiators. I mean, maybe that's kind of the playbook right here. S&P 709.95. 709.95. Why did Bed Bath & Beyond lose everything? Well, again, wow, look at that. You know, as much as I hate to say it, it is healthy. This thing pumped 30%. I didn't understand the 30% pump. I understood the pump because the earnings were really good for the first time in a couple of years. But once again, it's Bed Bath & freaking Beyond. Like, did it deserve to be up 30%? It's not profitable. You know, like when Meta is trading at 18 times forward, did Bed Bath & Beyond deserve this big of a move? Probably not. And that's why it's gone red. If that was all retail that pumped it up on those earnings, not institutions, then retail took their profits and left. And so that's why this one's down 2.27. Yeah, Bed Bath & Beyond, Beyond Meat. I mean, they can have one or two good quarters, but to realistically say, I'm going to take a portion of my hard-earned money and buy Bed Bath & Beyond stock, I don't think there's anyone in their right mind who's doing that. I think they're saying, hey, I think this thing is going to go up, so I'm going to buy it. And then when it goes up, I'm going to sell it. But if you're buying Meta or Microsoft, you're buying it because you believe in those stories. Whereas Beyond Meat and Bed Bath & Beyond, your brain has to be a little special to fully believe those stories. I think most people don't. Yeah, maybe retail's holding the bag and institutions pumped it. Am I just coping by saying this is healthy? I mean, maybe, but I really do think it's healthy. Like, now look, if Nvidia fell to like 180, I would say that's not healthy, which would be the equivalent of Bed Bath & Beyond falling 30% right here. But I think it is very healthy for a Birds or a Bed Bath or a Poet to collapse. There's nothing fundamental about these companies. And even if there's something fundamental about these companies, do they deserve massive earnings premiums when the biggest companies in the world can't get it? Probably not. So I feel like it's less cope. It's more so like, yeah, these are good, but these companies go down. If Nancy buys it, that's a different question. If Nancy's long Bed Bath & Beyond, we have our thesis. But unfortunately, she's buying Broadcom and TSM and Apple and Google and Microsoft. Like, those are the companies she's buying. It's Visa. It's not that crazy for her to be going long those names either. But what do we think? Rubio, 2028? Is that the guy? It feels like they're setting him up to be the guy. Where's the dollar today? Where is the dollar? DXY 98.67. That's pumping up a little bit here. Dana White 2028. Oh my gosh, dude. Who knows, man? Maybe Dana is going to have a political career one day. It's definitely very close with the politicians. But I guess we're going to see. I guess we're going to see. Probably, I mean, we should know by mid-2027 who's going to be the Republican. I mean, they have to start campaigning a year and a half before. So we are probably going to know in like 6 to 8 months who most likely is in the running. And also, it would be kind of weird if Rubio and Vance were campaigning against each other, right? Because they're in the same administration. So this is the first time in a while that two potential leading candidates are in the same administration, right? We haven't had that happen in a while. Like, usually it's just the VP. It's not someone else who's part of the cabinet. So I imagine one of them is just going to immediately concede and they're not even going to try to fight against each other. Because if they do, obviously, it's, I mean, like, how do you go to work every day and look at the person you're campaigning against? Like, that would be a bit weird. What about Biden and Harris? Yeah, but, that was a little bit of a different scenario. I mean, it ended up being Harris because she was the VP, but Biden just needed he needed to get smacked in a debate to realize that he just, was not at the age where it would make sense for him to go forward, right? And then it flipped. But in this case, Rubio and Vance are not that old. I don't think they need a competency exam to try to figure out if they're able to run. APLD down 8, Sandus down 7. Still, both of those getting hit. Yeah, Rubio was born in Miami, guys. Rubio is eligible. Who's the guy who's not eligible? It's well, technically, okay, so I think Ted Cruz was not born here, but there are people that say he was born here. I'm not sure about that, but Rubio, from my understanding, was born here. So, and Vance was born in Ohio. So they do have the ability to. IGV, are we still red? IGV is still red. Trump is still with the king. He's not talking anymore. The speech was a very short speech. It was not a long speech. He has an event in New York about what Joby pumped yesterday. Yeah, I think that's our main stuff for today. Our main stuff for today. What stock do you like that's down the most today? Again, I think there's a lot of AI names that are down. I don't think you have to be super greedy here. I think you can kind of let them materialize. I don't know if you have to rush to buy Micron 530 to 493, unless you've really, really been waiting for an entry. Like, I think today is a day for people that have bought nothing past month. Like, if you've literally just been on the sidelines with, and maybe today's the day you have to nibble at Nebius at 133 if you have 100% cash on the side, right? Because quality, super big beneficiary. You've been waiting for it for a while. You're not going to get it at 100 again. Maybe you do, but then you're once again waiting for it. And so you kind of have to indulge. But if you've been buying, like, what's the need to be super excited to buy something that's red today? Right? Like, the mic. Okay, hold on. Okay, how about now? Good. Dude, the mic hasn't given us issues in a while. So it's actually the mic, it's been about a week since the mic has really messed with us. The mic gave up from yapping too much. Yeah, exactly. Anyway, what I was saying is if you've been buying over the past month, what is the big desire to buy today? Right? Like, still bad? Hold on, let me hear it. What is the big... Okay, hold on. I know the issue. Hold on. Give me 1 second. Let me flip this real quick. 1 second. Okay, we're going to do this. Okay. All right, how about now? I think we should be better. Let's see. Okay. Should be better. SPY is still down. Perfect. Okay, cool. Anyway, what I was saying is if you've bought the dip over the past month, what is the desire to run and buy the dip today? Right? So on these questions of like, what would you buy today given that everything's red? I feel like you asked that question if you haven't bought anything over the past month, even over the past couple of weeks. But if you've been buying anything, if you're not 90% cash, like, I just don't think there has to be that greed, to be excited about buying a lot of dips. Now, maybe there's some specific scenarios like a Navitas down 18 that you think is aggressive, or a Broadcom down 5. But remember, Broadcom's down from 420. Broadcom was freaking 295. So is a 420 to 396 a good enough reason to get excited? Like, I feel like everyone has to make an individual choice on that. For me, I'm sorry, Amazon 265 to 259, there's no way in hell I'm getting excited about that. Now, Amazon at 212 a month ago, that was exciting. Even at 225, when I bought a little bit more, that was exciting. I'm not going to get excited about SanDisk from 1100 to 992, So I don't think that's the right question to ask today, unless you really, really feel that you need to get in this market if you're not heavily in it already. And in that case, then yes, there's probably opportunities. They're not the best risk reward, but they're a way better risk reward than what they were, even 2 days ago. So that's kind of what I think about that question. Mid, why is the market worried about what Jerome Powell's going to say tomorrow if it's his last FOMC? Well, that's a good point, because he probably is not going to have that much more influence when Kevin Warsh comes in. However, until Kevin Warsh gets confirmed, Jay Powell sets the policy of the Fed. On top of that, people got to remember this. People forget. Yeah, and we're still in greed as well, as Carolyn says, which means, maybe you should wait for a much larger dip. But again, if you don't get that dip, then if you have a lot of cash, that's where you have to nibble a little bit. Jay Powell can stay as a Fed governor for 2 years. So even if Kevin Warsh ends up getting in, if Jay Powell decides to, it's almost like a call option. If he decides to exercise his right to 2 more years as being a Fed governor, which I don't think he would, because the guy's got to be kind of bored of this by now and tired and wants to relax and spend time with the grandkids. But if he wants to, then Kevin Warsh is going to have, theoretically, I don't want to say an enemy, that's going too far, but a more hostile opposing view. Because basically, Kevin Warsh, if you guys haven't figured out by now, thinks Jerome Powell is an absolute idiot. And he's basically said that in every interview without literally saying that, by saying that the Fed is incredibly incompetent. Do you want to be working with that guy if you're now the new Fed chair? Probably not. Kevin Warsh probably wants to get him the hell out. Trump probably doesn't want him to stay. But if Powell's petty, I mean, Powell could absolutely stay. And I think that's where his opinion still matters because, the market might not be happy about that. Powell will stay to run the renovation. Yeah, exactly. That's exactly what could happen. Markets have historically gone down after a new Fed chair. That is true. Which, I mean, I don't know. Maybe that's what contributes to sell and may go away. Again, we looked at some charts yesterday. Sell and may go away has not been true for 9 of the last 10 years. So sell and may go away is actually it's not been a thing. But oil spiking, semis being overbought, and then the Fed or the market testing a new Fed chair, that could set up a catalyst of sorts to potentially create that pain. Yeah, Jay Powell would be like, I'm not effing leaving. Exactly. Amit, if you started a retirement account today, where would you allocate your $7,000? Is it for the Roth IRA? It's $7,500, right? Or is it 7,000? No, I think it is 7,000. Yeah, it is 7,000. It's 8,000 if you're age 50. Okay, so if you started a Roth today, $7,000. Poet looks very nice. You can get 1,000 shares with Poet. No, I'm just kidding. I don't know. I mean, honestly, I feel like you either have a strategy of picking one stock and going all in, or you split it up between a bunch of them. And once again, I think if we're compute constrained, the AI semiconductor names, splitting it up 1,000 and 7 of them is not that crazy. But again, the broader question is, even if you contribute to your Roth today, is it the time to use that 7,000 today? And given some of this price action, maybe it's better to wait. ARM at 197. SMH isn't a bad idea. So I don't think SMH is a bad idea, but again, it's just like, dude, this thing is run hard. Is a 4% dip enough to be like, all right, I'm just going to YOLO all my money into SMH? Which, quite frankly, again, it might be, because if big tech crushes tomorrow, maybe we just go right back to going back up. This is the first real red day we're seeing for semis in the past 2 weeks. S&P down 1%. We've had that a couple of weeks ago, so that's nothing too new. But, it begs the question. I also think Meta, Microsoft, Amazon, or Google, like just putting all your money in one of those, some of them will outperform the others. But again, these are the most important companies on the planet. I don't hate, if you're going to pick one stock, picking like one of the 5 most important stocks. Yeah, it's a breather day. Which, I know it sounds like cope, but I do think it's healthier than not. I just wish software was pumping more. Like I wish Now and Salesforce were getting a bigger pump. ServiceNow's up 70 cents today. Like that's like you want to see some rotation out of semis into other parts of the market, but it's almost like people are selling semis and not buying anything, right? Because nothing is like really benefiting from this outside of oil today because of crude. Space, unfortunately, not being a beneficiary today. Most of your tech stocks still red. Software is not undervalued. Multiple compression is warranted. Well, that comes down to a debate, right? Is the multiple compression actually warranted? I still don't know where I stand on this. Like some days I feel like yes, other days I feel like, well, wait a second. These are the most important enterprise applications on the planet. Like Anthropic's not going to just kill all of them. So that's why I pick my favorite software names. Maybe not buying IGV as an index in and of itself. And obviously Microsoft is one of the better ones there. Friday, thanks for the super chat. Amit, how do you think Hood will perform in its upcoming earnings? Talked about it in the morning. I don't think the numbers will be good. And I really hope I'm wrong on this. But from the math I've done, I just don't think the numbers are going to be amazing. Maybe the numbers are good, but they're not great. And then the market has to decide if they want to give Hood a premium. I don't know. I think there's not like Palantir or a Nvidia where they can surprise by just like having this exceptional quarter. We already know Robinhood's numbers. So unless there's something we're really missing, I don't know how good it's going to be. The implied move is 10%. Let me actually confirm that. Robinhood implied move. The implied move on Hood is 8.8%. Okay, so this thing is either going to 90 or 72 if the implied volatility actually takes it up or down. I mean, maybe it'd be flat, but I don't know. Rambus still down 26. Yeah, Rambus. This one got. I still don't fully understand what this company does. I learned more about it yesterday, but they didn't have a bad enough earnings to justify 25%. Unless the street thought it was, fully priced in. What about SoFi? Okay, so the amount of people that have asked about SoFi today, this thing better go up. This thing better go up tomorrow. I know SoFi is a big retail stock, but goodness, it's a big retail stock. I just think we all need to have normal expectations for both Hood and SoFi. Obviously, I'm more biased Hood, but I'm also admitting at the same time I don't think Hood's going to do that well, and I don't think SoFi is going to do that well either, because I just don't see how these companies blow away the expectations like an Intel does, or an ARM does, or a Marvell does, which, again, that's the reason they've pumped. Now, maybe they pumped too hard, which is why they're getting a pullback, but they pumped because of an earnings crazy beat. I don't know if SoFi or Hood does that. And in fact, I think SoFi might have a better shot of doing it than Hood. But I don't know if these two are in the right market environment right now to get a massive pump. And I deeply, deeply hope that they do, because like retail's heavy on both of them. But retail's also heavy on semis. So if your Hood and your SoFi aren't doing great this year, unless you're 100% Hood or SoFi, if you've got some semi exposure, it to an extent at least balances it out. And if you're 100% semis, then today's an ugly day. But that's okay, because you're up a lot over the past month. So I think there's a lot of gimmies and gotchas here, but they all ultimately balance out. What about the user growth on SoFi? Yeah, look, dude, if the street cared about the user growth on SoFi, SoFi would not be trading here. The user growth on SoFi is irrelevant to me. Like, Hood has great user growth too. Like, it's not about, or I should say gold subscriber growth, not user growth, because Hood is obviously a much more mature platform now. Like, those things don't matter at all. They are elements of the thesis, but what matters for SoFi is, in my opinion, operating margin elasticity, the flexibility on how they're increasing operating margins, which leads to better EPS growth, which, has not been as good as Robinhood at all. I think SoFi's at like 17, Robinhood's at 40%. On Robinhood, they've got great margins, but they don't have as much business because the markets have been crappy for the past 3 months. So on both sides, you have something good, you have something bad. And given this market environment, I don't know if it's going to be a type of blowout quarter where the street reports it. But obviously, I hope it does. My friend called SoFi a layaway company. I was wearing the Robinhood hoodie the other day. I went to a store to buy something, and someone was like, "Do you work for Robinhood?" I was like, "No, but I like the company." They're like, "Do you trade on it?" I was like, "Yeah, I trade a bit here and there." So the brand itself is definitely growing. It's just, obviously they need a ton of trading volumes for the market to be excited about it. Reddit down 7. Nebby is still down 6 as well. What about Hood's buyback? I don't think that matters either. Just like SoFi's user growth doesn't matter, Robinhood's buyback doesn't matter. Robinhood's already bought back $1 billion worth of stock basically over the past year. Hasn't stopped the stock from falling, So these are very idiosyncratic things that people can bring up around the narrative of these companies that I just don't think fundamentally matter, at least right now in this market environment. What about Webull? So Webull's had a good run because of the pattern day trading rule being erased. If you bought at the absolute lows, I think IBKR's earnings is an indication that Hood's and Webull's earnings are not going to be that good. So Webull was at $4, $4.70 on April 1st. It's now at almost $7, still down 15% year to date. You guys know my thoughts on Webull. I don't think the earnings growth on this company is anything to be excited about. I think a lot of people hyped it up last year because they were trying to find the next Hood. Webull, newsflash, is not the next Hood. There's nothing exciting about this business, like at all, outside of the fact that it's a brokerage. But if you're going to buy a brokerage, I think there's a better option. Now, Rebo's a small company at $3.7 billion, so maybe it's easier for it to double than Hood. That's for sure. But they've got to put up a ton of growth. I think Hood is a better business, but I still use Webull, so it's strange to me they aren't doing well. A lot of people and finance YouTubers use it. It is just because of management. I think just because myself, for example, am using Webull on the screen does not mean anything about why the stock should be doing well. Like, just because you use a product, like, it has zero relevance, quite frankly, in terms of the numbers. Because, I don't know, me using Webull every day, is that causing thousands and thousands and thousands of people to download Webull and put money in it and start trading? Probably not. It's just an interface for me to talk about the market, which is objectively better than Robinhood's interface, which I've admitted many times. I mean, Starbucks has struggled. A lot of people drink Starbucks coffee every day, right? This market is so rooted on growth. And if you don't put up growth, you don't win. Admit that's a bad take. I mean, what's the counter take to that? If I'm using Webull every day, and a bunch of finance YouTubers are, and their growth lacks in comparison to Robinhood, like substantially, like they grew 17% last year. I'm sorry, but we had one of the best bull years we've had in 2025, 18% of the S&P, and you grow 17%? Really? You should be growing 40, 50% like Hood did last year, which is why Hood stock went up, because people are trading like crazy. So just because a bunch of finance YouTubers use the product does not mean that translates to trading growth. So I don't see the excitement here for Webull. What about Hood's expansion plans and how that's bullish or not? You seem skeptical. Well, they've announced Indonesia a year ago. They just announced Singapore. I just think it's going to take time. They've been in the UK for a while. I don't think the UK has resulted in anything meaningful. They have tokenized stocks in Europe, but quite frankly, I don't see anyone talking about tokenization in Europe. Like, there's a lot of international initiatives that they've announced that have not materially come to fruition yet. So the reason I'm skeptical about the international expansion is because it just hasn't happened yet, which means it's not affecting the numbers. Till it affects the numbers, who cares? They can announce whatever they want. That's just objectively. Like, who really cares if they're going to Singapore if, like, they're not in Singapore? They're not making any revenue from Singapore. Like, this is stuff that I can't factor into my earnings estimates if it doesn't happen anytime soon. Starbucks is a mature company. Webull has a future ahead of it. Sure, if you're going to use Starbucks as mature and Webull's not, so Webull has more growth prospects, then that's legit. But where's the growth for Webull? That's the question. We can't just say one's value, one's growth, therefore there's more potential if the growth is not really there. I mean, go through Webull's numbers. There's not the type of growth that I think people should be getting excited about. The reason Hood had a run last year is because on every single metric, the growth was unbelievable. That's why they got all the upgrades out the wazoo. That's why the street kept putting it up to 100, 120. That's why they got into the S&P. Like, if you don't have that type of growth, you could be a growth stock, but it's not going to matter. The reason people like Reddit, even though it's down today, is because their growth is really freaking good, which is why Reddit gets a nice little premium, even at 147. Also, remember Webull had that shady deal with that Chinese company? What was that name called of that company that they diluted? It was like a $1 billion dilution. that they're allowed to do whenever they want. I forgot the name of that Chinese company, but the day they announced that, the stock went from 15 to 12, and then ever since then, it's been downhill. So, that also, I think, was a bit of a headwind. Panda Express, oh my gosh. It was not Panda Express, but it was something. Oscar getting some love right here. Wow, Oscar getting a move. I don't see a headline on Oscar, but it is getting love. Someone just sold 2 million of puts on Meta, 667.50. May 15th is your strike, so they're selling it before earnings. That's bullish. Yeah, Yorkville Capital. That was the name. Yorkville Capital. What about Grab on May 4th? Same thing as Hood and SoFi. Ultimately, the earnings growth will have to be massive, and Grab, Zeta, SoFi, Hood, these stocks are not Rocket Lab. They're just not in the thematic that the market cares about right now, which is AI and data center infrastructure. I mean, if ServiceNow can't catch a freaking bid and it goes down after already being down 40%, if all the companies I just mentioned and many more of them that don't have anything to do with AI or semiconductors infrastructure, Nubank, put that on the list, if they do not demolish earnings, I think the only place for them to go is down. Now, maybe they stay flat, but to get them to pump, I think they really, really have to prove to the street, you should not be buying NVIDIA, not be buying AMD. You should be buying SoFi. You should be buying ServiceNow. That's why Palantir's got a crutch. Palantir's going to get demolished on earnings if they don't put up the growth. I mean, I know Palantir has the burden of proving it every time, but also Palantir's a $350 billion company, so they should have the burden of proving it every single time. And now their moat is being questioned because software is theoretically being seen as commoditized. So once again, they've got to absolutely put up the numbers to keep their premium. Lending Club, did that go red today? Wow, 20-17. Goodness, dude. And they put up some real, I mean, I think SoFi, if this is an indication of SoFi, I think SoFi is going to crush it. But then once again, stock pumps and then it dumps. And SoFi's done this almost every single earnings quarter, right? They pump and then they dump. And again, I don't think that's SoFi's fault at all. That's just how the market interprets them. But you're seeing that happen on Lending Club right now. Rambus now down 25%. All right. I think that is it for today. We will be back for earnings tonight. We got Hood. We got Coinbase. Not Coinbase. We have Hood, Visa, Starbucks, Waste Management, Enphase. That's today as well. FICO, Mondelez, Booking, Seagate. That's big for memory. There's a lot of names today besides Hood. Hood's going to be the focus of the stream, but obviously we'll get you guys all the results. We will be listening to the Hood call. Tanner, Roy, and I will be able to ask a question on the call, so we will ask a question again. And we're just going to have to see what these numbers look like. We're going to have to see what these numbers look like. Oh, Bloom is also today. That is correct. Damn, there's a lot of Bloom now getting hit. It was at 235, now 223. So you have freaking Hood, Starbucks, Visa, Waste Management, Seagate, Bloom, Enphase, Bookings, T-Mobile, Teradyne, FICO, NXP Semiconductors, and then Mondelez. Massive, 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 massive earnings that we have today. All right, cool. That is it for me. Let's do the word of the day, and then we'll get out of here. Today was a longer stream. Wow, it's already 12. It's already 12. Okay. That's what this whole week is going to be like because we got earnings this week. But tomorrow's going to be a big one. Today's going to be a big one with Hood. And, it's red going into the print. I actually like that Hood's down going into the print, but the entire market's down. So just going to be a question of if today's a decent day to report. Word of the day. I think I've heard of this before. It's definitely better than yesterday's. Austere, severe or restricted manner, plain and without excess or luxury. An austere approach to spending and risk can quietly build long-term strength. Austere.
Austere.
Okay. Not bad. Not bad. Yeah, I was thinking austerity as soon as I saw that, but austere. There you go. Severe or strict. An austere approach to spending and risk can quietly build long-term strength. Kind of similar to austerity. Okay, cool. That's what we got. Thank you all for being here. We'll be back at 3:45. We got a lot of earnings. Obviously, Hood will be the focus, but tons and tons of companies reporting today. So we'll be scrambling at 4 p.m. to get all the numbers out there. Ugly day for the semis. I don't think it's that big of a deal. We've had such a massive run. It's a normal pullback. It's a healthy pullback. Maybe AMD's not going back to 300, but it doesn't have to go back to 350. So a 320 consolidation is, to me, actually very reasonable. And as long as this doesn't become a downtrend. And so we'll see tomorrow after big tech, Thursday, does this become a trend? But if it's a 1 or 2 day thing and it's more so a question of them taking a breather, then I think that's actually somewhat more reasonable. Can you please teach Tanner to pronounce about correctly? Did he say about in a Canadian way? I know he says bagel in the weirdest way, bagel or something. Yeah, I've definitely heard him say bagel in such a weird way. A boot? Wait, does he actually say it like that? A boot? Oh, someone's got to send me a clip of him saying it. Like, I need to hear a boot. He says a boot. You guys clown me for a lot of things, but a boot is hilarious. That is great. Okay, I gotta hear how he says that. Okay, what do we spam Steve with? Steve's live. What do we spam him with? What do we do? What do we spam him with today? We need something fun. We need something fun. This is always the hardest part, figuring out what the heck we spam this guy with. Maybe just a boot, right? A-B-O-O-T. Yeah, that's perfect. There you go. A boot. He's going to be so confused, bro. He's going to have no freaking clue what the hell we're... All right, there we go. A boot. That is a spam for Steve. There's a stream live. A-B-O-O-T. That is what we are spamming Mr. Steve with today. All right. Thank you, everybody. I'll be back 3:45. Tanner, Roy, and myself. Robin at earnings. A lot of other companies. I'll be back in a few hours. Thank you, everybody. See you guys in a bit.